How would you like to get a business loan for bad credit with an instant approval up to $25,000, if not $35,000, and even up to $2 million and above without collateral, no hard credit checks, and lower documentation? Hi, this is Michael with Viral Funding Solutions. Happy Monday, everybody. Let me know where you are tuning in from. Please give me a hashtag live or hashtag replay if you will be watching later on. I want to get into things today on how do you get a business loan with bad credit. And so the three things that I normally go through, let's run through an introductory first, are credit, cash flow, collateral. You either have one of these three, two, or all three. And if none of them, we work on the foundation, which is business credit, establishing trade credit. Even as a startup and a non-startup, you can qualify for that, installments, then you get revolving lines of credit through business credit cards. But the point of this, when we go through all of it, is separating your personal from your business. But not a lot of you do that, have done it, but you still can't qualify for those other solutions that will report to the business credit bureaus. And this is already untraditional financing, not an actual traditional business loan. So just keep that in mind. And if I haven't said this, and if this is your first time, I'm an expert business loan broker who knows how to look at documentation, evaluate it, analyze it, and then connect you with the best lenders and underwriters. And in this document, I'm going to switch over to a tab here in a second and run through a bad credit business loan. It can be instant approval. Not all of them are same day instant approval and same day funding. Some of them are. It just depends on the revenue category, how much manual of a process we have to underwrite a file. A lot of the times when you see same day instant approval business loans, or in this world, business funding through advances, hybrid advance / term loans, traditional merchant cash advances, I don't normally work with those as much, where it's just based on credit card statements and a few things. But all revenue coming into the business, that's what we're focused on, not the credit product, not the collateral product. And I'll leave more information to all of this down below. In fact, there will be a questionnaire form down below you can fill out. Simply takes less than a minute, and then it'll land in my email inbox, where then I will evaluate it, analyze it, and give you a proper response back via email. I'm very cerebral, in case you didn't know this. I'm very meticulous, cerebral. I come from a mathematical, system-minded perspective. I went to school. I educated myself. I went first for sociology. I was a Division I soccer player. And then I used my math side of my brain a lot more over time. And I got into chemistry. I really loved chemistry, got into chemical engineering. And then I saw the market and I wanted to start a business. So eventually business administration led me down that route. And like many of you, as a 9-to-5 employee in my younger 20s, I struggled. The company that I was with, a financial logistics position, went down under. And I had to go back on unemployment benefits, food stamp cards. It was a hard reality I had to face, let alone going into a grocery store, giving my EBT card, not looking eye to eye. I felt embarrassed. I didn't want to go through that again, yet I had to in my younger 20s. And post-academics, being brought up the right way, these things happen. I worked in construction, manufacturing, and I didn't work in the cubicle field. I was actually in the field position. I was working the machines in manufacturing with an aerospace company where my dad was working at the time. I worked with my uncles in a different place, warehousing. I was even a ramp agent in my younger 20s. But I did things back then, and then I led into a financial logistics role for one of the biggest contracting companies servicing HP&P South. Things started to change, but I wasn't getting paid what I was worth. And so things had to change. I had to start my own business. I looked into things with a digital marketing agency, lead generation business, which I have till this day. I do affiliate marketing in the health space. I have that in another vertical in that space too. And I have other ventures, and this is my primary focus as a business loan broker expert. So no further, let me go into this screen that I'm going to share with you. Give me 1 second. Again, all information will be down below. And what you need to know as we go through this document, it says there, before you click through to the application down below, I told you about in the video, which I didn't. This pertained to another video I made not too long ago that I'll try to link to, a business loan application. And I showed that, and then I go into this part. Below are more of the qualifications for revenue-based funding and more services. So before I go into any of these, you're about to see the qualifications it takes to get bad credit business funding. We don't call it loans in this space. We call it advances. So basically what it is you're getting advanced a certain amount based on your future receivables. And I'm going to clarify for a lot of you why you're probably getting disapproved, you're struggling, you're feeling overwhelmed, you're tired relentlessly. It could be anything. You could just be sitting on your couch overheating and just trying to entertain yourself. So you don't want the satisfaction that comes with that. You're just so used to it by now. It's sub-programming and consciously, it's subconsciously, excuse me, that you've been doing that for so long, and that nobody's been telling you how this actually works. You go out there, you get bombarded with emails, and you're not sure about who to apply to. You're like, are they even credible, reliable, trustworthy? I don't even have a personal relationship with them. But with this guy, Michael here, I know about, and I have that relationship with already. And it's whether it's established a lot or enough of, I know he's going to get me the best, and I don't overpromise and underdeliver. So keep that in mind. We're going to go into the revenue based here in just a second, and I'll leave this information down below. So the instant approval part, it depends again. If it's a more of an automatic review in the part of underwriting that a manual underwriter cannot look at, because if they had to look at all of these files where people were just generating $3,000, $5,000 minimum in revenue per month, how energy and time efficient would that really be? They could put a team behind it, but a lot of this stuff you see automated. Other ones above that revenue, yeah, we've even done it same day. Those are rare. I had a lady not too long ago who was doing around 300,000, getting approved for 600,000, and she got her funding the same day. Why? Because she had all documents submitted necessary. Plus, it wasn't an extensive amount of underwriting. We saw her profile, we saw her bank statements and everything. We said, this looks clean as ever. And yes, she can get approved for this. She was responsive that same day. She took the funding. She started with 150,000 to begin with. Other people have done the same thing too, because they don't have to supply extra tax returns and documentation. With this, it's just about 3 months of bank statements, or 4 if in California and a few other states, a copy of your driver's license and a voided check. And a lot of the times we'll ask for it up front just to have it. We'll need the voided check and the copy of your driver's license, more so your voided check, to be able to finally close it. And I'll tell you, and as we go along with this, what could happen with issues. So here it says PS, as you scroll down to the very bottom of this document to the conclusion part, and locate the business funding questionnaire to get a highly personalized and customized email response on your best funding option and options with what you see below and more. Also a free 6-step pre-approval lending checklist. So I'm going to go ahead and bury this. You guys are going to finally realize why you're not getting what you want to get. Well, this sucks. I should have listened to the reviews, or this. A lot of you are making excuses when in fact, you're not coming to terms with yourself. Yourself first, second, your business. Character first, reputation second. I don't mean that to sound aggressive or negative. You hear me raise my tonality, because I really do care about you. And tough love does need to happen from time to time, because a lot of you get the shortcut. I want EIN only loans, no SSN. If you want to get EIN only business loans, it's really difficult to get approved for. I've made content on this, and it really doesn't happen. EIN business credit cards, you can apply it with your EIN without your social security number to start building your trade credit. And I'll leave more information on business credit building, as well as repairing your credit. Okay, 1 second. Your credit, guys, is an important factor in contributing into not only revenue-based, not so much collateral-based, but credit-based. If you guys want creative credit-based financing, yet you don't have the credit profile, you have barely fair credit to get those Capital One Spark cards, or whichever ones, those low Capital One cards, or those starter builder business credit cards, and you still get a few in between. But what, that's only 5,000, 10,000. Like, you don't even will use those over time. As you grow your business and you start getting more business credit cards, you'll realize when you have a numerous amount of them that these little low tier cards, they won't be used as effectively or as efficiently or at all. And you're going to end up probably closing those accounts depending on everything. You don't have to close them. I really don't recommend, unless you can't get an increase and it's been too long. And it's like, well, I have these other cards that are working in my interest. That's another story. So let me get back into the subject. For qualifications of the revenue-based funding, for those of you with bad credit, you can also have good credit. I didn't say that in the beginning. There's a lot of material to go through, a lot of them that I have put down, but I can only cover so much in one video. I want to make sure you guys get out of here in about 30 minutes. I don't normally speak this fast. Gerardo knows that. Appreciate you. Thank you for your comments. And I'll get back to those of you guys have anything, leave it down below in the comment section. Right? You guys want to be treated fairly, right? You guys don't want to be treated in a way where, well, this guy's not sharing with me anything. Or you guys go to a website on a company, on a lender. If you're going to the wrong lender, that's another thing. You're going to an indirect lender. Are you doing it correctly? Are you doing it right this way for yourself? Do you really understand what you're getting involved with? A lot of people don't take constructive criticism well, and it's just a shame. So for qualifications of the revenue-based funding without collateral, please read over this carefully, and all else from this point forward, application below. So I'll leave a similar document to like the one you're seeing down below. And if it isn't there, it's okay. You can also go through the questionnaires where I would begin with. And some of this material may be altered, I'll change, and I'll move out from time to time. This is also for the purpose of sharing with you in this video. You're operating for profit. Nonprofit does not qualify. For the majority, it doesn't. Now, If you're a nonprofit and collecting money from other third parties and it's considered revenue, then we'll look at that. Certain donations and certain things may or may not count. We have to look at other external sources of how money is being put into a business. But a lot of the times, nonprofits do not qualify. And we could do a little bit of a search, but it's very difficult to. Do you have a business checking account? Excuse me. Must be in the name of your business, not a personal account you use for business. If you're using a personal account for business, go to the self-employed section down below, and I'll have it in green heading as it shows you there. For those of you in here who go, well, I don't want to read. You tell me I have to watch this video. How many of you actually will make even a commitment to yourself to read this? I know so many of you out there who just start an application and I go, it was listed there. See, I have processes, I have systems, I have automation. So when you fill out that questionnaire, you will get the best. I know how to pre-underwrite files very well. In fact, over here, I have another, I wanted to bring it up for the purpose of this video, but here I sent somebody for their company, what they were looking for. And I just introduced myself. I asked how they're doing and a few things. And I hope everything is going well for them this year, for them and their business. So please keep in mind as you go through this email that I know how to pre-underwrite a file and files very well thoroughly. And through the lens of an underwriter, the professionals, the lenders from A to D, all the tier of lenders, they want to see in the very best, even without looking at the documents at this moment. Let me say that again. Even without looking at your documents, I'm not asking for 3 months of bank statements just yet because I know how to underwrite these files. I can tell depending on revenue, depending on credit. If there's not a collateral question, then we can seep through that by me entailing more to it. But that's what I'm stating. And here's an email that's confidential that you guys can't see, but it's for a client that I've done it for. And I go ahead and go, hey, so right now, due to being a startup, right now, due to being a non-startup, or you are a startup with low monthly revenue, you wouldn't get approved with a revenue-based lender unless you're doing $3,000 a month the majority of the time and on your lowest month in the last 90 days. With at least 3 months, sometimes they ask for 6 months. And as I go through the credit-based qualifications that I'm pre-underwriting myself based on what you provided, we can go with the combination of this, this, this. And I would go, hey, this if you have this credit, this if you have that credit. If you don't have that credit, can you get an individual partner who is willing to apply? And if not, okay, can you raise your credit or can you do both split or however you best see fit with multiple parties? So I'll give you this information and I'll show you what it looks like on this document more or less, but it's more customized and personalized for you. So back to this, we'll close up here, 12 minutes coming in. I'm going to try to go through this as quick as I can, although I don't like to move quickly through things. If you know me, I'm rather slow. And like they say, the tortoise, not the hare, won the race. And so I take my time to listen more than I speak. And not transferring funds from personal. So back up here, if you're using a personal account for business, go to the self-employed option below in green heading, like I said, and not transferring funds from personal to business. That does not count as stated true organic revenue. We don't want to see personal to business being moved. I can go on and on about this, but we want to make sure you're depositing correctly. And I always advise depositing directly into the one main revenue generating account. You can have multiple business checking accounts, but if you have that one where you're depositing most of your money and frequently into, that's what I recommend. Personal to business. If you have a personal account, there will be an option for that. I have people lying their applications out of their teeth. I had one recently. Why would you say you're using a bank account, a business bank account, when you're using a personal bank account just so you can get approved for it? You don't think we'll see these things? A lot of you guys out there need to be held more responsible and accountable. This is a characteristic flaw, not as much as a reputation flaw. Again, that's character, that's attitude, that's effort. That comes down to being hard-headed, cockiness, stubborn. There might be multiple things, maybe none of it. Great, you don't have it, well done. As entrepreneurs and business owners like ourselves, we work on ourselves, so we don't have to have these issues. And like many of you, I began there. Don't think that I didn't have some of this. I've never been cocky. I've always been confident and certain. But you have to have the right aspirations, the values, all these beliefs in line. Otherwise, you'll just continue to fall apart time and time again, being lured into a place you shouldn't be going into, which majority of people do. Online banking, is it set up? We're in a new time, PDF format. I'm not going to go too much into that, but have it set up. A lot of people take snapshots. Please take the PDF version of it. 450 plus credit. FICO credit is what we're looking for, usually basing things on Experian. A lot of the times you see FICO 8, FICO 9, FICO 10s. But FICO 8 a lot of the time is what we look at, especially for credit assessments. You can look at other FICOs, lower FICOs for mortgage assessments. We're not going to get into that topic right now, though. We want to speed through this. Although 500 plus is best, if not 550 for lower revenue below 15K, usually around 5K, but somewhere around 500 and above, 450 sometimes we can get in. Now, if you have low revenue with very low credit, negative trade lines, Maybe you have low history, credit age history, although that's not entirely what we look at. It is a factor. Certain lenders will decline you based on, okay, they already see your revenue decreasing. There's a trend there. We're going to look at it in just a second. And then they look at the negatives on your credit. And it's like, okay, well, this is a negative trade line. These are a couple negative trade lines. Like on top of your revenue decreasing, on top of your credit, we cannot allow you to take funding. Your history, especially if it's most recent, shows us that you're not able to handle your own payments, or you are, but you had to step aside. So I have a lot of people who come to me with these confusion or all these things that they don't understand, and I'll clarify for you based on your situation as well. But this is a lot of the times what happens. So we can still take a look. 4+ months time in business. Sometimes they'll ask for 3 months with the self-employed personal account. Sometimes 6 months. You'll see with a few others as well. If you're a startup, then go to the green heading that reads personal business/startup loan option 1 down below, and go through other options that are credit-based. That's going to be more credit-based down below. I'll leave that. 3 months of revenue, at least 5,000 plus per month, and on your lowest month, 5,000 plus. Here's what I want to get into in a second, which is consistency of depositing. But let's do this. At least 3 to 4 plus deposits per month is best. The more, the better. And I'm going to get into this really quickly because I share this with a lot of people for the majority of the time. And this is really common sense for a lot of you out there wondering, well, I wish I would have known that. Well, how is it right that we're going to lend you if you had a huge amount of revenue dip? And it depends on the current month to date on where we are, if we're going to approve you, or we have to make an adjustment because your depositing is less. So here's the thing that I want to address for a lot of you out there having problems getting declined, and this might be one of them. And when there's also many that can be added. So additional concerns for denial. We look at this month's current revenue, meaning corresponding to the month you are applying to. So make sure you have enough revenue. That's what we're doing, to make sure you have enough revenue and deposits, and that the month today that we're looking at it. So if you're applying at the middle of this month in April, middle of next month in May, June, July, later on in the month, when your revenue is least. Does that make sense? When your revenue is the least, when it's less, that can be a major concern. And so if we see you're doing 15,000 a month, and then we look at this month, or if I asked you, hey, what's your current monthly revenue this month? A lot of the times I don't have to ask for, a lot of the times I will. But look, when we do a bank verification check at the end to look to the account to make sure the sales, everything, the depositing, the revenue is right and where it needs to be, at least if there's a dip, can we work with this? If there's too much of a dip, let's say you're not depositing at the beginning of the month, you were depositing the highest, or you weren't depositing any, but let's say you're depositing the most, and then you come apply later on in the month. What do you think is going to happen when you're not consistently making that revenue you were the months prior or earlier in that month? Of course, it's going to result in a decline. That's common sense. Why are we going to lend you based on what you did last month? Okay, you did 15, but this month you've only deposited $3,000. And we're in the middle of April, and we're going to expect you to deposit a huge lump sum at the end of the month, going into like the last second to last week. That's not a good way of doing business. If you're waiting till the end of the month to make one big deposit because that's how you get paid, I get it. But Michael, my depositing frequency, we're going to get into things in a second on that. But if you're already depositing irregularly for this corresponding month, and our lender, our underwriter looks at things, myself included, on all of this, and we go, hey, your bank statements or this, hey, this what we looked at your current monthly revenue, you're now doing 2,000, 3,000. Where's that 15,000 you were doing last month or 2 months ago, or when you were at the highest here? What's going on? And so without asking too much, we go, hey, the lender's going to get shady, and so rightfully so. So you can bring up any answer you want. You can tell me, hey, well, I had to take time off. I went on vacation. I had to put a truck in the garage, or I had to put my piece of machinery away. I didn't have enough of an employee. You can tell me so many different times. The only two things that the lender wants to know are, one, can you pay them back all of what they loaned you out to, advanced you? How fast will you pay it? It's not really so much of a concern, but if you pay it off faster, it really does help. And then two, what happens if you don't pay it? Now, I want to know more. They want to know more too. It's useful to know what your funds are used for, your time in business, your revenue, your credit, your fundability details, making sure you have the foundation set up, business address, business phone number, listed in the 411 directories, and so much more. But a lot of you get turned off when I talk like this, or when I bring up, oh, well, this guy's telling me the truth. I don't want to hear it. And you guys go watch some other video out there on how to get a business loan. how to get a small business loan, and they tell you like the nicest things. Like I'm that way too. That's who I am. That's my character. But at the same time, you guys need to hear it from a different perspective. Gerardo knows this. It's all about tough love. Exactly. And so I'm never pressuring anybody. I'm never impatient. I'm very patient nowadays. I give feedback. I'm open-minded. If you were my broker, you wouldn't have issues with me. Period. I wouldn't cause any resistance. I wouldn't cause any friction to you. Well, because now I know this industry well. I funded my businesses. I've been doing this for a while. So back to this, and we'll try to speed through it. I know we're going fast on here, but I'm trying to speed through this as much as I can. So to make sure you have enough revenue and deposits that the month-to-date revenue is enough so you can support the loan payments. It depends on the time of the month you apply. Best to apply earlier in the month, or if you know that you'll be depositing less and having less revenue half the month. Or so it just depends on the situation. You're going to deposit more at this month, but we're looking at your application towards the end of the month. Like, does that really even help you? And so if you're like dropping 50% in funds, 60%, 70%, that's a huge red flag. Yeah, we can look at sometimes 10, 20, 30, 40 in some cases not. And we go, okay, well, that on top of their credit profile, they already have some mislate payments or a payment here. Like, we're trying to be lenient on them, but we can only be so much. So if you have huge revenue dips, like it's cut up into even half of everything and more so or less, that's a huge red flag. Unfortunately, with the month-to-date revenue, half the month was gone too, and then it's too low to fund. That can be a reason you get declined. So keep that in mind for a lot of you out there wondering that. It's a huge, huge reason. And a lot of you just go apply everywhere and anywhere. And that's not a good thing to do. So at least 3 to 4 plus deposits per month is better. The more, the better, obviously. And if you're depositing infrequently, you deposit it at the end of the week, bi-weekly, monthly, or however many times in a month, you could deposit every single day, which is best. I know not a lot of businesses are set up that way, restaurants and retail more so than others. There are many others that I've worked with, and I've worked with just about all of them. I've seen all the problems. So if I were to ask you, what's the major problem you're dealing with right now? Could you answer that for me? And if I went into it more specifically on, so is it a use of funds issue, or is it a more of a financial issue? Maybe it's something that you need to address your numbers a little bit more on. And I won't get into all that too much unless I have to, but what is the major problem you are focused on right now? What is the major problem you are enduring? And so when I know that, I can even go even deeper into that. And so if that's not the problem, there's usually a deeper underlying issue that's rooted in fear, that's rooted in misbeliefs, and much more. I know the psychology, guys. I really do know when it comes to getting funding and other types of business models, because I have other ones, like what it really takes. And I know a lot of this stuff sounds dry to you and you want to hear the fluffy material. You guys always want to be hearing the whole, well, yeah, sounds good. Great. But you got to hear this like reality stuff, because you learn it and you go, that's what I know not to do, or that's what I have to avoid, or this is what's happened. Now this is what I can do to avoid it. So back to this, and that's what you guys are a lot of you are not doing enough of in your business. You need to make more mistakes in your business if you haven't made it. There's some you don't have to, but you'll come across plenty of mistakes. If you know, you know. And so the more the better. If you're not depositing frequently, there might be another option. It's more credit-based though. It's collateral-based. Can you even qualify for those? But if you're like in a position where you're only depositing once at the end of the week, you deposit 3 times a week, 4 times a week, you go, well, I don't want to get taken out a daily or a weekly. And a lot of these are daily or weekly. The monthly repayments, are the bank term loans, FDIC banks. You have the SBA loans, equipment loans, credit-based loans, personal/installment/term loans. That's what it is. Personal lines of credit, personal and or business credit cards. A lot of these you see are daily/weekly. Micropayments enable you to micromanage your payments, and so you can make them on time. Having a default where you have to make a huge lump sum at the end of the month. Does that make sense? Medium to high rates. If they're medium to high rates, the benefit has to exceed the repayment. For a lot of you out there, take this money to double, triple, quadruple your money. But a lot of you need to use it also for expenses. What percentage are you already allocating to payroll? What percentage are you already allocating towards your equipment? Do you have any other purchases? What will happen throughout the year? You guys really need to dial in on if I take medium to high rate money and I have bad credit, or if it's good credit, but you can't qualify based on cash flow, and we have to look at tax returns and more on the SBA, the bank loans, and you're not going to get as much of an approval. It takes longer. There's a few barriers to entry there. Credit, the bank term loans, online term loans, you don't usually need to have collateral. There will probably be a UCC lien, like most. There'll probably be a lien on those business assets, if not all of them, and it can also help push the deal to go through. And if the lender sees that enticing enough and they go, to make this happen, I do need to have a lien on all this. It could be a property. It could be something you're already thin on. If you're already thin on things, it makes it difficult to do things. So just keep these things in mind. So back to this. And don't hate me, guys. I'm just a messenger, and I'm an actual business loan broker expert. Like, I know my stuff. A lot of people out there presume, okay, I'm just going to refer some. Like, no, it goes way beyond that. And I actually can look at documents, and I can do a lot of things. So at least 3 to 4, the more the better. I know if you're in a business model where you're not depositing that much or you're slowed down, it happens. I get it. But that also leads into the, how are you depositing? What's your current month? If I were to ask you, what's your current month? You tell me you're doing 2,000 now, but you had 15, 20, 30,000 consistently the last 3 months. Well, that doesn't look good. They're going to usually decline you based on the current month when you go through an approval. And that also goes without being said. For a lot of you who get disappointed, well, I had to go on vacation, or what do you mean? Well, why wasn't the revenue where it needed to be? Oh, because this was in the shop. Okay, well, that's your main revenue generating income stream. Your trucks, your equipment, your Sally or Jerry, who's the receptionist, somebody handling this, they're helping you generate the most amount of revenue. Now you lost the person in the front. Now you're losing 10,000. Like, what are you going to do to pick back up? And you have to pick that back up first in a lot of cases. So you're depositing your funds into one primary business checking account and not transferring with multiple accounts over and over again, which looks suspicious to my lenders. Looks like it to myself too when I see these, when I look at the bank statements and I read them thoroughly. And it's hard to track. So if you're getting paid by a vendor, suppliers, and the money's being commingled or it's just being transferred from one account to another, it's hard to track that and see if anything has been altered, whether you think it hasn't or not. That is not verifiable income in a lot of cases. So one thing is personal, another thing, personal income, and it's another, or a personal account, I should say, or you're using personal income on this. It's another thing to verify where that money's being moved from. So if you have those online transfer from checking to, you got to be careful of how you're transferring your funds, you're wiring your funds, electronic transfers there. And comes from like a vendor or similar, as I said, it couldn't be counted as true deposits, or could it be? Do we have to look at another business account? Does the money land in there? How does it land in there? And then if you have another business checking account, if you're moving money from that account to another one, okay, we might have to ask for those checking accounts and verify that that income is correctly stated, however you put the money into that account. Is it personal products? Is it business products? Is it personal debt, business debt? What are you trying to do? Maybe it's the debt consolidation, refinance situation, a debt restructuring situation. I do all of this stuff, guys, and I know the best in this industry. Be very careful. I was just reading about another one the other day who was very, very suspicious, and I looked into it, and it was very suspicious. So be very careful about who you guys consolidate with, who you guys look for getting funding with. So that there, if you have multiple business checking accounts, we'll have to look at them all, as I said, but also make sure you're applying with your highest generating revenue one. If you have bank statements with different banks, then we will need to look at the last 3 months, sometimes 4 months, depending on the states and so forth, depending on that service as well that we're looking to get approved for. And each bank account, and you'll want to apply with your highest earning bank account. No more than 5 non-sufficient funds, NSFs, or that's for short, or negative days in any of the last 3 months. Bounce checks, overdrafts. There's plenty of things I can address here, but having insufficient funds, you're already bouncing checks. You can't even make payments to your current providers. If you have existing advances, I don't want to get into that in a second. Like, how do you expect to get higher tier financing? Just because you're struggling doesn't mean they're going to approve you for a higher tier with longer terms. If you're trying to refinance, you're trying to consolidate, there's more than that issue at hand. There's also other things you got to look at. And so if you're already not making your current debt payments and you're struggling, you're falling behind, whose fault is that? You are the business owner. When you get into the business, you should have a concrete A, B, C tier type of plan put together. Well, if I had an A, B, C tier plan, that means my A tier plan isn't the one I'm primary. That's not it. You got to have certain plans in place, certain procedures that if you were to leave, how is your revenue going to keep up? If something goes into the shop, can you have something to use temporarily that'll keep your revenue afloat? So when you get approved or you go and apply for funding, you're not in this predicament of, hey, my monthly revenue currently for this month, let's say April, and we're already in the 17th of the month. That's why it's a huge disadvantage for a lot of you that I work with. And I go, well, you only had 2,000 in deposits and your actual revenue was about 1,000, 1,500, or your true revenue was actually like 2,500 or more or less. And so with that said, it's like your March month, you had 15,000. And then the month before that one, you had 20,000. And then you had January being around 16,000. And so what are we seeing here? 2,000, your revenue just dipped over 50 and over 80%. What are we supposed to do with your revenue dipping and you're concerned and you're PO'd? Like, it won't frustrate me. Like, that's not, I'm empathetic and I show sympathy, excuse me, when it's asked for and when it's needed. But the thing is, a lot of you like to just throw out accusations. A lot of you like to throw out excuses. Well, I'm trying to clarify for someone and they go, well, I should have known about that product and I knew it wasn't any good in the reviews. I should have listened to that. No, what you didn't do is listen to yourself. What you chose to do was listen to just all this rah-rah and all this noise that didn't work for someone else. But for you, could it have worked? Could it not have worked? So you're not in the same situation as somebody else is, even if you're in the same industry. That's one thing. But you have to understand, do not go around, go through. If you have to fix your personal credit and your business credit, work on it. And I get fired up about this. I'm never aggressive. My family will tell you that about me. I'm not like that. I'm actually very quiet. I'm an introvert. But I've learned how to speak up when it comes to a video. And although it still scares me, I'm definitely afraid of them, to be honest with you. I'd rather be behind writing and blogging because that's what I do a lot of too. But no more than 5 non-sufficient funds or negative days in any of the last 3 months. So bouncing checks, you already have other providers. So here, if you're falling behind on any current cash advance loans, unsecured financing, unsecured business financing, that is not normally business credit card related, or I could be falling behind on, but this was different. So current cash advances, hybrid advanced term loans, or similar, like for a week or so, even below that, or even just above that, you won't really qualify. Like, how are we going to give you another position? You're already falling behind on other payments. Like, how do you expect to us be certain that you're going to pay us, let alone pay the people you have to pay? How are you using the funds? That's what's most important. A lot of you guys are just using it for like the same reason: expenses, payroll, COVID relief, mortgage bill, boom, boom, boom. And then 20% of that goes into growth and expansion, but it really never does anything to your revenue, does it? Does it do anything to your gross profit margins? Maybe it doesn't have an immediate effect to your profit, your net operating income overall immediately, or your cash flow, probably cash flow dips a little bit, but you have to understand that even if it dips a little bit or so forth, can you come back up again? Can you resurface? So current loan consideration, if you have a current capital advance, the amount you still owe will be taken into consideration and cause a reduction in your approval amounts. More funds, second to fourth positions may be available. Caps lock there. Let me actually put this. If you have an existing cash advance or similar, it will cause a reduction in what you can get. And if you had more positions, you may not get anything at all. So for those of you who go, well, I have 1 position, 2 positions, I'm looking for 300,000. You've already done these. And okay, are you trying to consolidate? Can we even refinance that debt and give you new debt to take on? Well, you can't, because your cash flow isn't sufficient enough. It's not in a position enough. Your annual debt payments, we can't refinance that debt. We can't clear that debt out. So we have to focus on eliminating that first. Maybe it's a form of a return you have to file so you can have appropriate cash flow, and a few things that we can do. This goes the same with all business loans. But if it's idle, it's PPP, it's ERC, it's 10K grants, other grant opportunities, right? Everybody wants free money. How can I get free money? Well, how about how can I set up my profile better? This is a better question to ask. What can I do more effectively to set the foundation for my business up? That's all you have to ask, or similar to it. There's so many variations of it. How can I acquire the right mindset and skill set to take my business from 25 to 35,000 per month within the next 3 to 4 months? And then you reverse engineer the way you come back to that, and you look and you focus on those problems that you're trying to solve in your own business, and you focus on putting a spreadsheet together, a business plan, you game plan for this, and you say, hey, I'm not going to exceed X amount. I'm not going to exceed Y, Z amount. Here are my categories. Here's what I'm willing to do. Here's not what I'm willing to do. And there's a few more things that get added into that. But a lot of you guys don't get that part. And it's just like, when you come get funding from me, it's very evident when I see a business owner who hasn't been treating their business correctly, or due to government mandate or other issues that were out of their control. That's another thing, okay? We can't control those. But when you have a chance to control that, especially your attitude and your effort, the skill set, and you just decided not to build those skills, whose fault is it at that point? Oh, what's my location? It's my family. It's my, okay, these are a lot of external reasons, but what was working before that you can do again, or what could you do differently in a location set where there's not a lot of people flowing through? So you guys got to think outside the box with a lot of this. So those usually don't cause a reduction. So if you have the PPP idle in those, they shouldn't be correlated and usually don't cause a reduction for the most part. So current loan or loans consideration part 2. So read this part. This is actually very huge for a lot of you misunderstanding this. The majority of lenders will not lend you another. Let me put this in caps lock, actually. Or let me put it even, actually, it's probably too much. 15-point font. The majority of lenders will not lend you another advance, hybrid advance / MCA, whichever one, within 30 to 45 days. So make sure it's been past that 45 days. That's what I would do. I wouldn't wait till the minimum. Yeah, sometimes the minimum of 30 days, but for a lot of these cases, 30 to 45 days, they won't fund you the majority of the time. And if they do, it's probably a discredited lender or organization that's trying to make a reputation for themselves, and they'll take on whatever and whenever. And then they get a bad reputation down the road, and then you get upset with them. It's the company's problem. No, in fact, it's actually your fault because you're the one who signed and dated on that line, right? And so here within 30 to 45 days, so make sure it's been past that due date to then take another position. That's what I would do. For a lot of you out there seeking funding, it happened last week multiple times where somebody took funding last week. They shouldn't have taken funding. I said this in another video where they made a bad decision. They made the bad call to take on more funding, let alone they didn't even know what they were getting themselves into. For one, they took funding they shouldn't have taken. It was terrible. It was a terrible term. The rates and all this stuff was just funky. The amount they were getting approved for from the lender, it was just terrible, terrible, terrible. I don't want to get into the details. That's confidential. But we were getting them approved for around $10,000 more or less with better terms, better rates, better stuff, better lender, better provider, better long-term strategic partnership and roadmap, yet they made the wrong decision. And then secondly, they went to apply for more, or they were already applying for this one, but they took another one in the time. So they were uneducated about the process, and that's what I'm here for. If you have any questions, I usually address it in an email in case you didn't come through my questionnaire, or in case you came through another sequence, I'll try to address that so you have that in an email format or in a separate way. Consolidation. For example, we can either give you a second position if you don't already have one, where you don't have to pay off your first one, or we can give you a large loan and you pay off your first for your large advance, and you pay off the first and you net the difference. That's what you keep. Not have a default with another advanced loan company. So we can go second to fourth, second to fifth positions. This is fourth. We can do like 5 positions. But if you're over leveraged, how are we going to give you more money? Keep that in mind. You're just trying to resurface. I'm not getting paid fast enough. I need more money. I need more money. I need more money. Okay. What is it that you need to fix in that business? If I needed to continuously focus on getting more money, I'm going to focus maybe on higher clientele. I'm probably going to focus on higher delivery of my product and services. I'm going to focus on my operations a lot better. I'm going to focus on eliminating certain parts of my finances so I can reduce and trim and then grow my revenue better and more effectively. And I focus on certain clients that are paying me on time. Or, hey, this happens and this happens. I get it. A lot of things just shift in this economy. So that's that part. And let me move over here. We can either give you a second position. Okay, we said that. Not have a default with another advanced loan company in red, regardless of how long ago. I know a lot of you out there go, well, I had an advance, but it took a default. And people go through the application all the time. There are a lot of them right now who are silent. They've gone cold. They've gone Homer Simpson into the bushes. Casper the Unfriendly Ghost cold. And I'm not bashing anybody. I'm bashing the behavior of people. That's a difference. I don't bash the name of a person. I'm bashing the behavior of a lot of you. And it's very unaccountable and irresponsible. It shows me you're very much so your character. That's what it shows a lot of. And so you usually don't get any more funding in this industry with the default. There's like 1 to 2 lenders that I have who may help you, but you'll start with a lot less if you get any at all. It's not to say they're going to approve you. And these are a per case basis. So if you've already been making payments in the past, maybe you took already another advance in the past, you demonstrated payments, you've cleared it, or you won another position. Okay, we've seen that you've been able to, or hey, we've seen other payments based on your credit as a soft pull. Okay, you've learned your lessons. You don't have anything negative reporting, or your credit looks clean now, although we're not basing it off of credit entirely. We want to make sure, because that factors in. It's a morale character issue. And there's a little bit more that goes into that. There could also be a default with the judgment in place, which doesn't make it any better. And when you default on a lump sum, no lender will lend lines of credit. So for those of you wondering out there, nope, that normally doesn't happen. So background checks. If your background report comes back, and there's a case to be made with the lines of credit on that, but we can work on business credit cards and do a credit line through that way if possible. So background checks. If your background report comes back with a criminal record or past financial issues and past UCC filings too, and undisclosed and things like that are an issue, then it can be an automatic decline, but we can be reasonable. If it was something that happened in the past and you learned your lessons and you change your ways, it happens a lot of the times. I do get a lot of people with criminal backgrounds, and I love working with each and every one of you, especially when you've learned your lessons and you've gone through things and you say, hey, Michael, I've made a big change in my life. I'm not like that anymore. And it proves and it shows to me, especially when we look at things and it's like, okay, great. I love your story. I love the fight you had to go through and endure, and you learn those lessons. You come from a different upbringing. I get it. It happens. Okay. So not used for real estate investments like fix and flips, rentals, etc. Passive investments. Use the personal/business/startup funding option for that, and the credit line hybrid that you can see later below, and or traditional real estate financing private lenders with my real estate specific form. Also, now have issues with financial fraud for a lot of you out there, manipulating bank statements, whether you are or not intentionally. You guys a lot of the time are manipulating those bank statements just to get approved, like it's going to happen. Past default and past default judgment in place. Submitted altered bank statements to another lender, same lender. Additional concerns, I already went through this. The denials on your current revenue. Be up to date in your revenue. You have huge revenue losses. Like, how are we going to lend you? Whatever the reason is, you are getting upset with yourself. That's not my issue. That's your issue to get upset with yourself. It didn't go as planned. Something happened in the business. What are you going to do to change that and make it better? Do I need to get a better truck? Do I need to get a new instead of a used truck? Do I need to actually start saving more money and start instead of just reinvesting it completely always into the business? I take out a little bit. I pay myself first so that I can use that money to purchase other things that are going to be beneficial to the business, or you put more back into the business in a certain deposit in a different way of doing it, in a security deposit, or however you're doing this to get access to the funds you need to. So think about all of these things you're going through. Application, before you get started down below, here it is. And I'm going to quickly go through what this application sequence looks like. And I'll have it in a different tab, not to go away from this, but give me 1 second. And at any moment, if you guys have any questions, please feel free to voice them down below in the comment section. And I'll leave maybe a link down below to get started with this. Of course, you'll see in the document. But you'll go through the business capital tab. There's the line of credit we have, the self-employed funding, the equipment financing, asset-backed employee pay advance, employee retention credit, payment processing, and there's a few more things, but this is the best one where you submit it. There's direct lenders, indirect lenders. A lot of the times in this market, it's best to go indirect because of the flexibility and the versatility. It's best to do it that way. We protect your credit. You submit things in our online application process. We can see it and we can get it in the back end. You can also send it to me directly, but it depends per state now, because business loan brokers have to be careful about who they accept or what documentation they accept from different services. So a lot of the times I'll tell you to submit it this way. That way we can get it in our back end to review there. It's there, here, it's in these hands, etc. You have all this to go through. Here's how I'm going to follow up with you after we look at things, blah, 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 boom, 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 boom. So the team and everybody's looking through it, etc. So keep that in mind. So let's say you went through the business capital tab, and then you're going to click on the green button. Usually there is one there. If not, it's changed. But here are the 4 simple steps. And before I even go into these 4 simple steps, let me move this over. We have a meet or beat guarantee, meaning that if you have a current offer, there's a contract, you have not signed and dated, you have not returned back, you have not done the bank verification, final underwriting parts, etc. And we can verify. We're not just going to take your word for it. We actually have to see, like, why are we going to take your word for it? Does that make sense? We have to see that you have an existing or multiple, and you go, hey, I have an offer here of, let's say, 100,000. I got one for 80,000. But can you help, Michael? I'm not sure about them, and I can look through them, and you can tell me who the lenders are if you feel open to. It's better to, what the rates are, what the terms are, so we can see that and be more effective with it. And a lot of the times it helps me understand, like, okay, that's not the one you should have gone to. You thought you should have gone there, but that's not where I would have gone. That's not what I would have done. I wouldn't have done that because of this, boom, boom, all this. And I'm not saying it for my best interest. A lot of the times people come to me with the wrong, and I go, hey, you already have an existing relationship. Yeah, continue that through with them. They're going to give you an extra increase, or they're going to give you a little bit more there after these 45 days or so. Okay. Yeah, you want to return back to them. That's more effective because you don't want to take out another position. Pay that off first. We can come back and we'll probably do it better, higher tier lender. Boom. And so here, and I'm not the person who likes to sell. I don't even like to use the word sell. And I've just become very good at providing value and listening. God gave me big ears, big eyes, a big nose for certain reasons. And so our meet or beat guarantee. So if you don't get your offer met, or we don't beat it, let's say, then we can give you a $500 gift card guaranteed. If we can't meet or beat your best funding offer. In 4 steps, though, here's the application process. Step 1, you apply. You'll complete the simple application. You will be done in minutes. Step 2, you will link your bank or upload statements. There's a manual. There's an automatic process depending on the underwriting and the the amount of revenue you're generating in your business. It takes time to do all this stuff, guys. You guys have to understand the manpower behind why there's an automatic process as opposed to a manual that you have to go through depending on revenue and so forth. So depending on your funding type and amount that we look through in our back end, you will be approved simply by verifying and linking your bank account or by uploading your bank statements. Step 3, you receive an offer and you get funded. With most of these fundings, you will receive an instant offer on your screen. So there's like that instant approval, sort of, kind of a pre-approval. I mean, it has to be readjusted. Don't always take those word for word. I know a lot of you guys are programmed not to, and a lot of you who are like, hey, but I thought I was going to get, no, we still have to look at the documentation. And like, if you're given these details based on that, here's more or less, but I can get a little bit more precise as well in the questionnaire because I know how to pre-underwrite these things and I know the actual underwriting process to a lot of this. And I've seen different industries, so I kind of have an understanding of the terms and all this stuff before I even looked at documentation. So a lot of you have misconstrued beliefs about what you should be getting. Like, I deserve, you're entitled to. You're not entitled to. You're not deserving of it. Or are you deserving of it? I am, but I can't qualify for that right now. So there are different things. So with larger fundings and lines of credit, you'll receive an offer via email within 1 hour to 1 business day. So it can take 1 to 2 days to get you an offer, if not 1 to 2 extra days, because we are underwriting, trying to get you an offer from the best lender. And if there's a direct lender, of course, there's a time and a place for that. But a lot of the times it's better to look at this because I already have those direct lenders anyways, that we go in here and go, hey, we can pull from one. We actually want 3, but we're going to entice these 2. We actually wanted this one to come in. Once they see this one or so forth, they're like trying to work for your business, and we protect your credit, by the way. And we're getting you the best, by the way, on this. And we're saying, hey, here's what we can do. A lot of business owners who come through this, they go, okay, well, somebody the other day, like not too long ago, got approved for, like, they took 10 to 15,000 somewhere, and then we were getting them like 90,000 night and day. And that lender would never have gone beyond like 35, 25,000, but they wanted to earn that business is respect and so forth. And they were accustomed to helping out somebody in that position. They said, we're going to get them a lot more. And so you just have to know who you're working with. Not every one of these organizations is created equally. I know that. And so there's full transparency with me. Step 3, I already said that. Step 4, share the great news and save. So there's a Connect Cash program where you can save thousands and pay off your balance much faster, and it's much cheaper. You get to earn 2% on all funding. Somebody comes in, you get funding first. Somebody you refer to in your network or outside of it, they come in, they get funding. You get to earn 2% of that. And all funding, so you get more people, they come back, boom, 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 boom. All right, 2% on their fundings you can use to pay down your existing advances. And then that makes it cheaper. You pay it off early. No prepayment penalties, early payment discounts, and the best by far out there that I've seen that we have. And so these are great advantages, 1% on all employee retention credit. So I'll leave this information again down below. You'll go through an app sequence, by the way, where you're going to submit, you're going to answer a few basic questions. I'll try to leave information on how that'll look like. But you're going to go through, hey, do you have a personal account you use for business, a business bank account? What's your credit score range? What's your monthly revenue? And then we're going to have a process where it takes you then to, hey, you are going to get approved for this service. So we're going to go through this service, boom. And then we're going to ask for uploading 3 months of bank statements, copy of your driver's license, and a voided check. 4 months. If we don't ask for it right away, I'll say, hey, I'll connect with you, excuse me. Hey, can you submit this 4th month of bank statements to this email for this person? Or you can send it to me this way, depending on states. And then we'll get it also this way in our backend. Boom, 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 boom. Attach me to the email if you would want to. You don't have to. Get it this way instead. Boom, 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 boom. And then done. And then the next part, I'm taking care of all this. So back here, as well as my team. And so here, you see the application. Let me continue to go through this, and we'll close up here. We're 48 minutes in. I'm going to try to get out of here in underneath an hour. So this is just this part right here, the application. And I'll probably tell you, hey, you'll want to submit, to select, and then you'll come to a part of the application process. You want to select the advance option or the advance, or both, because we can evaluate you for both the line of credit and the advance, the term loan and the advance. And so just depending on what you can qualify for, you'll want to select from those options. Not everybody will qualify for the 2 advance and the line of credit, or the longer term loan, etc., and the advance, or the longer term loan and the line of credit. It doesn't always work that way. It's always in your best interest to select advance or select both. But if you don't qualify for the line of credit and you want to be looked for that, then that's the case. And I'll submit this stuff for you in the questionnaire, so you guys have no question about it on what to do based on your details. So note the amounts here that you can get up to are $2 million. There are more for collateral based. I might touch upon that briefly here, but here's the service. This may look familiar to some of you watching this, or it may look familiar in time. You're going to go, I saw it in this video, but it's customized. It's personalized to you. It's not exactly, you can call it a template, but it's revised. It's moved around. It's highly personalized and customized. An introduction, based on your file. And I'll have the service and I'll move numbers around. I'll move critiques here. I'll put this here and say, hey, based on your situation, this is best, or this one's best, second best, third best, boom, 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 boom. And I'll break it down based on your file. So it's customized, highly customized for you. So hybrid advance / term loan option start here is what we're focusing on. Best option right now for a lump sum and faster funding in like 1 to 5 days based on your business bank statements, but not to be used for real estate investments. Start here in passive investments, I should say. This is for a lump sum. Best advance and intermediary term loan option for mix for a lump sum and faster funding in less than a week, normally and based on all revenue coming into the business and your industry and revenue along with credit. Credit is less of a concern, but that will factor in if there's an issue with revenue and then that leads down a spiral, or if there's just an issue with credit. It's like, well, you haven't been making payments here. Like, why? How are we going to issue you funding when you can't do that? And so documents and application will be below. And let me put this in red because it'll be there, and it was above as you saw. Also note that for revenue-based financing, all lenders in this market are usually giving weekly repayments, even on lines of credit, because it's hard. It's a hard market right now. And it's always been daily or weekly, and especially in a harder market and a downturn and things that are happening with banks and everything included. Like, a lot of people are coming over here and they're asking for my help, and I'm there for you. But just understand how you're using this money effectively. If you're making $2,000, you're depositing $2,000 a day, and you can't even pay us back $200 a day. Like, that's just you being nitpicky, and that's also you maybe saying, hey, I don't understand my finances as well, or hey, I do understand that, and then the next month I'm going to be dipping a lot. So if you understand that, that's a different matter. But everybody's in a different situation. Also, as I said there, but it's hard for right now to get a monthly lump sum. There is a monthly advanced term loan lender, but it's hard to get approved for them. It's very rare. It really doesn't happen right now in the market either. So lump sum, it's not only going to require you for that to get 750 plus, even in this market, 700 and above credit, but 3 years time, a lot of the times it's 5+ years, and has very strong average daily bank balances, monthly bank balances, monthly revenue, everything more than just 50,000, if not 100,000 per month, and making sure more stays in than goes out of your account. Cash flow is sufficient, everything, but it's still hard to get approved for those. So don't bet always on a monthly unless you're doing bank term loans and SBA loans. I'll get into in a bit. That's when the lenders look for more. Weekly is great because you don't need a huge payment, or you're just one payment at the end of the month with perhaps other monthly payment obligations you have already with credit cards, rents, or other mortgages, etc., other businesses. Week to week helps you plan better and control what goes in and out. Trust me, especially if you weren't to get paid from your customers right away or so forth. You're getting paid on terms. If the term account receivable financing option makes sense, we'll get into collateral in a second. We'll go into credit second, and then we'll go into collateral. We'll close up here. I know we're way over time. Only use if the funds are not for real estate investment. So you may see this also in the questionnaire that I submit back to you. And please take the time to read. I don't want to hear you doing or see you doing this or getting that thought. Like, it could feel overwhelming in the beginning, but I can't address all this over a phone call. Like, I can go through everything. I know how to do things well to help you. I'm not going to sell you. I won't pressure you. I listen. You'll hear me pause, and you'll think, am I still on the phone? So not everybody gets a call. Not always does everybody need one. It has to also make sense. Emotionally, I love it. Logically, it has to make sense. I had somebody today in Messenger say, hey, Michael, can I give you a call, or can you call me? No, let's fill out the questionnaire first. And I told them why I do it this way, because if I would be answering calls 20, 30 times a day, imagine that. An introvert in Michael answering 20 to 30 calls a day, although he can do it well. How many of you want to be doing that? So there's a time when I submit that questionnaire response back. If that time needs clarity for purposes of that, then it may warrant a call if necessary. A lot of the times people don't need that. I funded a lot of business owners. One of those is the 600,000, 700,000, 900,000, a million, even less, way less than that, without ever even being on a call. I just had somebody right now who got funded without even being on the call with them, looking through certain emails. And it's because they already know me. They've seen my content. They know who I am at my core as a person. And if they don't, they at least know my why, as in my business why, my what, my how, but more so why is what you need to know about myself. Why have I gone through this? Why am I going through this? So back to this, and we're going to try to close up. I know we're 54 minutes in, but I hope you guys are getting a lot of jam-packed value. Bring your friends and family over. Have them watch this video. I don't want excuses. Have them watching this. A lot of you guys are just applying to those ads, those companies that are just sending you advertisements, and then they're bombarding you. They're not getting you the best. You guys are upset. Hey, can I consolidate this? I can't help you consolidate it. You just found yourself in a bad situation. Did you even know what did you need to use the money for? Ask people back in the day. Okay, so there's a common trend. Well, why did you have to continue to use it this way? Well, because I'm like, okay, so the problem are your clients. So what are you doing to change your clients if you can? Can you change your clientele? It's how fast you deliver that product so you can get delivered your money faster and on time? Or what are some of the things that you need to fix in your business? See, these are the fundamentals that a lot of you just don't do. A lot of you guys get into business and go, well, if I'm going to generate money and I got, no. And you will learn along the way as well how to change things. It's not going to happen just overnight. I've had those where, yeah, I should have done this a little bit better, but then I readjusted and I didn't make that mistake again. Period. And so here's the service. Only use if the funds are not for real estate investments, passive investments, without needing collateral. Business credit established, you don't need to have that as well. And you can have poor credit, 450, as we kind of alluded to earlier, 500 plus is best with revenue. I'll let you know based on your credit. A hybrid cash advance / term loan intermix is a derivative of the traditional merchant cash advance. And this is what you see in the space. Hybrid advances, unsecured business financing that are not banking, not SBA loans, not credit-based loans, etc. Is a derivative of this, which is actually, this is one I'm showing you right now, is going to be less expensive. A lot of the time, generally less, 50% less expensive, etc. Where you can get looked at all revenue, and that's a bonus. You get all revenue coming into the business, not just certain credit card statements, etc., or a percentage of your daily sales. You fluctuate, you get more taken out. If you make more, less gets taken out. If you make less or nothing, or there's a fixed percentage, and if you don't make that, like, you guys got to understand these things, that it's in your best interest to look at this. So where you get looked at all revenue coming into your business, advance and amount, usually depending on how many deposits and revenue your business is making per month. The more the better, 3+ deposits consistently per month. Certain revenue levels may ask for 4 to 6+ months of deposits. So you'll know, and we'll kind of go over things depending on your revenue level. Might ask you to have at least 4 to 6+ months of deposits and in handy. And if you're dipping, you're fluctuating, like, that's a concern. 3, 1, 2, now you're back to 1. Like, okay, what season, part of the season are you in? And that's a season issue, or is it something else? And so if it is a huge reason why you are dipping in deposits, like construction businesses deposit all the time and they deposit infrequently, I see a lot of. And it's like, well, what was the major reason why? And so if we can understand that better and go, okay, well, this is why, and how to prepare ourselves for it not to happen again, or how, if you do deposit less, how can you sustain your revenue? How can you sustain your business? The revenue part of the equation is what matters. So if you dip in revenue and you're complaining about it, then what's the issue? That's what we got to go look at even deeper and see how can we alter, how can we change the whole issue. 3+ deposits per month, as I said, and even more depending on that service and that provider. Sometimes the lender will ask for, depending on the one we get, we go, oh, 4 to 6 months. They're wanting, okay, but it's a little bit lower. It's in this industry. Okay, we can work with that. They have shown us that they can do this. Maybe they ask for more bank statements, but we don't have to ask for too much beyond 3 to 4 in most cases. Sometimes 6 months of bank statements helps, but a lot of the times we don't need to. We're looking at the most recent 3 months. It's super fast funding, even same day, and is open to poor credit scores and don't need business credit established or any of it all. Usually we don't need business credit established. Most of the time they don't report to the business credit bureau. So the majority of this will not report to business credit bureaus. For a lot of you guys out there wondering, well, which one does or which one doesn't, this one doesn't normally report to business credit bureaus. Sometimes it does, depending on the program, a higher A-tier lenders, etc. Depending on its line of credit, perhaps it'll report. But don't expect that with unsecured business funding lump sums a lot of the times, and they won't normally report timely payments to the personal credit bureaus. At times they will, depending on that provider, but it's good too. So it doesn't show all that like a personal loan, installment loan, where it's making those reported timely payments on your personal credit profile. And what happens, and I'll get into this in a second, unless you were to default, then that can be an issue. And with the default pass judgment in place, then that gets placed on your credit, and that's a huge issue by that. So keep that in mind. So most of the time they don't report to business credit bureaus. They won't build your business credit. There are other ways of building your business credit, guys. You don't have to focus on this and say, well, if this isn't building my business credit, then I don't want it. There are other ways that are more productive that can work much faster for you in installments and revolving, a combination of them and more, that are much better than this. So you can add this service on top of another one. Business credit cards, you're already reporting timely payments. And a lot of you who are not monitoring your business credit need to be doing that. I recommend that with a company like NAV. I'll try to leave more information down, but I'll leave also a business credit building free video series for you guys in the description. Yours truly, created content on this video based. There's also some written stuff. There's free stuff you guys can take, and you guys can see an actual software and an actual service that I've been able to use also for my businesses and what many people have been using as well. So check that out. I'll leave it in the description down below. Now's the time for you to fix your personal and business credit, and or just differentiate your personal from your business. So most of the time they don't. And the timely payments on the business credit bureau. So since we're dealing with personal credit scores and unsecured business funding, that's it's not a traditional business loan. They come with personal guarantees, as rightfully so. No collateral is required. So stop looking for the EIN only, SSN non. Can I just put my EIN? And a lot of the times we need to see your SSN so we can verify who the person is. We can verify the financial track record, the creditworthiness, the person's credit. So how are we not supposed to see those things and just give you funding based on your business? Especially if there's nothing built on your business, EIN only, business loans, like that's not going to happen for the majority of the time. So that's something you guys got to give up on and start working on the actual diagnosis, which is the credit and other components. And stop just sitting on like those idle loans. Are they going to come back in this? I get it. I understand what you guys are going through there. And it's like, well, if I have a longer term, lower repayment, like that would make more sense. And I get it. But what can you do now is the question. So I have a special hybrid merchant cash advance company, which is a hybrid advance. It's a derivative of it. It's not a traditional MCA. Don't worry about that. Lender and a partnership with the best direct and indirect lenders for an in-house look. Best and most recommended way for getting you the best look for my lenders while protecting your privacy and not hurting your credit. We only choose one lender that's best fitting for the majority of it and for flexibility and maximizing. So one lender normally. A lot of times people ask me, can I get two lenders for them? No, well, there will be two. And maybe we bring up and go, well, these two are asking about getting this amount or wanting to get proof for you this amount. But when we show you like an offer stage, then I can say, hey, these are the 3-4 offers, but you can get up to this amount, or you have negotiation power, or you don't. You have to either take this or leave it. And is it a benefit? Does it exceed your repayment? And for flexibility and maximizing your funding, that is generally 50% less expensive. As I said before, generally less expensive is better to dial in on. More flexibility, a lot of higher approvals, maximum funding, and much more I see. Especially unsecured business term loans and traditional merchant cash advances, aside from those. Plus, we don't take a future percentage of your credit card and debit card sales like a traditional MCA. So you don't have to worry about getting that taken out more or less. If you make more sales one day and less for a day, you make less. And we don't have interest rates. We calculate on total payback, less confusing. Yeah. Also, you can deposit in more ways than one, not just credit cards. And you accept your customers such as cash, ACH checks, and more, and not just based on your credit card receipts, which is great. Another plus is that we have a Connect Cash program. And then this is where you can get, this is what I was talking about earlier, 2% and the 1% back, but let's speed through this. We're over time. This will be a great fit for expansion work, depending on your situation and what I'm looking at. I'll address those issues or those causes. And if it's right, if it's not an issue, I'll add on a little bit more. This will be a great fit for expansion, working capital, payroll. Maybe you're trying to buy equipment, but you're using revenue based, and this is the best effective way because you can't add a down payment or you're not going to get approved for the other ways of traditional equipment financing, leasing to own, sales leaseback, etc. If you're cash flow positive, the better, the better. Otherwise, I'll share with you the line of credit and more below for cash flow concerns, but you get approved for less with an LLC, 40 to 60, 40 to 70% in a lot of times. So if you were to get approved for 110,000 in a lump sum, you could potentially be getting approved for around 40 to 50,000 in the line of credit in a lot of cases, maybe more or less. So it may be harder to get approved for in this market too. And if anything, it's closer from 50 to 100,000 in monthly revenue, somewhere around 400 to 500,000. I want to see doing in annual gross revenue, if not more. For certain industries, we want like 700 to a million. A lot of the times it's closer to 800 to $1 million, to be honest with you, in annual revenue. And then the credit looks sharp, not just the minimum. A lot of the time, 600 credits. I want to see 680 plus, 700 plus, but more so 725. Better time in business, better credit. It's going to require those credit requirements and those assessments to really look sharp. But on the shorter end, because of credit and more, and it will be less. Right now, the LLC won't really work, or I'll address to you and say, hey, it'll work. We can add this on top of the LLC. I'll have more on the lump sum, and I'll have more information on that down below. And more uses, since we also offer 4 to 24 months in length term, which gives you more than enough time. And I'll give you guys a 2 to 3, 5-year option down below with the bank loan in just a second. I think it's rightfully so that we go over an hour. I know I try to say 30 minutes or so, but I think you guys are getting a lot of value from it. Share this again, please, with family and friends. If you guys would like to, you don't have to. but I see a lot of shady content on YouTube. I see a lot of people who just have a huge following, and I go, they're just showing you gram video after gram video, or there's another credit card video on this. And that's great. It's very helpful for the right person. But that same right person will go back and say, I didn't get approved, or I got approved, but it's very little. How can I get another grant? How can I get another high is really what the answer is. So the question is. And so there's a deeper problem. And it's like, well, my credit and I can't fix it fast enough. I get it. You can't fix it fast enough to the level you want to get to. You want to get to the good credit level, but it's going to take you from a low 500 to a 700 minimum around 10 to 12 months. So what are you doing within that 10 to 12 months? Have you established business credit, trade credit? That's what actually we should be focusing on first and foremost. And then can we then, once we get your credit up enough to a fair credit level, can we work on some business credit cards? Maybe we add an additional personal credit card or something more. We increase the limit, and then we pay that down with the payday loan now that you have the revenue sufficiently enough to be paying things off and then being used for other reasons to grow and expand your business. And then later on, you add multiple business credit cards at 0%. This is how you grow, not the whole, let's just jump around, like the whole song, Jump Around. You know, that's a song for fun and activity. It's time to jump around. When you feel happy, you started your business, you get those endorphins, you get those oxytocin hits. And so a lot of you need to become more emotionally controlled as a business owner. And I'm one of them. And I've focused on a lot of that, reading books, being in masterminds. And I'm opened up like a layer. You got to open me up like an onion. And once you really do that, and it takes the first peel to do like 10 times, you got to really claw in with me. And rightfully so, it's hard for me to trust people. You should feel the same way. And as an introvert and working with people in this field, it shows me time and time again, a lot of people are not to be trusted with. And I see it because of their character. Their characters will get in the way. Yeah, you might be a snobby business owner. You might not be. You might be the best. You treat your clientele great, but then when you go home, you're like abusive, or you're just reckless, you're stubborn, or maybe you're not. And you're like, there's just something. What's the issue here? It's your finances. That's what it is. They've thought this, they've thought that. That's not how it works. They did not set the foundation of their business correctly. This is what's transpired because of that. Or if we can catch it early on, what do we do? So back to this, we'll try to close up. I know we're an hour's worth in. We're going to try to close up here soon, guys. Please stick with me. If you guys find value from this, please give it a thumbs up and please share it with others. I don't normally say that enough until the very end of the video. I'm not one of those to share it like that, to ask about that much. And be that, oh, I'm that person. I don't want to be that person. That's why I don't bring it up, or it's just because I forget a lot of times. And so you see here the time frame. We're going to get into a bank term loan and the SBA loans and equipment loans if you wanted 1 to 5 years, if you could take equipment loans, or personal funding with 1 to 5 years, and it's more credit based. Also, these are great for short-term return on investments, activity, financial wise. It could be as well as long-term. So it just depends on the term duration. It depends on when you need to get more funding. The project, though, is what really drives everything. Like what kind of expansion project or projects, how much money will you need towards payroll, or what do you need to make this more effective? Okay, you can come back and get more. All right, you didn't get everything at once. So be strategic. That's the key word, strategic. A lot of you guys don't look at this, strategic. And when you don't have that perspective or that point of view, it's like the wonder. It's why you keep going and circling back and forth and being upset with someone else, when what you should be doing is really just being upset with yourself. Whether you are already or not, you should just be upset with yourself that you didn't come across this earlier, or, hey, it's not all your fault. Let me take that burden off your shoulders, because there's other lenders and organizers and organizations, and providers out there that are not doing it correctly. And a lot of them are not doing it by the book. So about how to use your funds, this is most important. It's not like you always need a longer term too, and paying more towards the interest and maybe towards the principal. Total cost of financing over time is more expensive. And it has to make sense to approve you for a longer term, like 1 to 2 years, beyond 2 years, for a long-term return on investments, larger purchases, larger projects, and so forth. So if you have those in mind, but if you needed something shorter term for a project that's going to generate you 20 to 30,000 in the next 4 months, you had 8 months of a term, you're going to pay it off early. What did you need 2 years for? Just because you felt like you needed more cushion, convenience, comfortability, be more comfortable? I get that. We all get that way. If it's more convenient, if it's more comfortable, if it takes less effort, if it takes less costs, we're going to take the least amount, or we're going to take that route possible, right? But everybody's in a different position. And so it is best used for increasing your revenue, your gross revenue, margins, and profits when you get to these points. And if it doesn't happen directly or right away, then there are ways to get there. So using it to double, triple, quadruple your revenue, etc. We already went through the qualifications. This was just an adjustment or things that I added, subtracted from a previous thing that I had. And here is kind of the spot. Here, let me move this. Okay, so we got to learn about that. We already went through the qualifications. And here's how it works, more or less. You can get 100 to 200%, or sometimes 75% to 200% of your lowest monthly revenue in the last 3 months. And we also will take your average into consideration. We look at the current month too, especially if I ask you, what, like I said, if you're already regularly depositing, you're not having enough revenue, we're at the middle of the month, towards the end of the month, well, you're going to put a huge check at the end of the month and you're going to make those 20,000 that you were doing before, but you're at 2,000 now. That's not a good plan for a lender, for myself. There's no way I would even give my family and friends that at all, in this way or another world. Like that, like unless I really trusted them and I saw like a return on this and it was like they've been proving to do this, like it's the end of the month, they put this in once and they worked once, so I'll give you a little bit. I still probably won't give you anything. So keep that in mind. And we'll take your average into consideration. So we look at the lowest month in the last 90 days. A lot of the times you see these with your average into account. We can look at a ballpark number and say, hey, if it's 30,000 on your, I'll get into this right now. So to try to get you more. For example, if your lowest month is 10,000 and you're averaging 10,000 with 120,000 in annual gross revenue at an average daily bank balance of $5,000, best to have above 1,000 in average daily bank balance. We have to look at average monthly bank balances too. It helps. But we can still have a look, if not, but harder. If you're underneath $1,000 on average daily bank balances, that's a tough decision for us to make. You better have stronger revenue, but that means just more money is coming out of your account than what is coming in. That's one part. There's more to it too. What you're starting with, what you're ending with. And I get it. You pay 50% of this to a supplier, a vendor, or you got to pay this subcontracting company or contractor or GC to do the project. And if they don't, I get all that stuff. But at the end of the day, the money has to be made back to the lender. That's the two things. How the lender is wondering if you can make the payments back on time, pay it all back. And then two, what happens if you don't pay it? Yes, so you should be held accountable and responsible for all of this. But we can still have a look, if not, but harder. Then you can get somewhere between 7,500 to around 20,000 based off your lowest, based on average number. Sometimes we see a big mix where I say, hey, somebody was doing 50,000 and then they're averaging 100,000. So maybe we get in between that 75% of that 50 up to about 100,000 at most. Or it could be 50,000, 75% of that up to about 200,000, or excuse me, 100,000, because that's the 2%, 2 times that amount. So that is a case to be made for certain files, but it's not to say you're going to get 150 above 150% approval of your monthly revenue or 200%. Everything else has to look clean. And if it doesn't look clean, well, you have to start somewhere, don't you? And if that's the case, don't be upset. Say, hey, can I use this money for the meantime? Can I come back and get more? Do I have a huge project? I need to use this for this huge contract that I need to make a purchase on. And if I don't get the 50,000 that I need or the 100,000 first, then it's not going to work. I get it. There's a place for everybody. But if you can take this, for the majority of people, they can take what they need to and then use it. And that's what happens. So here, sorry, I was getting a notification from an email. I'll get to that in a moment. But we can still have a look, as we said there, to start, come back and get more if you need to right away. You know, you get 45% of the balance, 45 days in, add on funds, pay off 50% of the balance. We look at refinance. We look at getting you more funding. Great. We can do that. Even double, triple, quadruple the amount. No, excuse me. A lot of the times we double it. I was starting to think about using this money to double, triple, quadruple, excuse me. So a lot of the times we can double the amount, better the terms, lower the rates. So it can be higher or lower depending on your business situation, as well as depositing frequency and revenue, and more like your industry, bank statements, other positions, etc., come into account. To start, more on the lower end, if your projections are going down, like decreasing revenue, that's not a good sign. We just had to recently decline somebody, not just based on just the revenue itself. There were more factors, but they were going down. And the reason that you need to use your funds for is it's like that's not going to help it even better. And so if you're doing like 400,000, 300,000, then you have 200, like that's not a good sign. And I get it. There's things that happen. There's stipulations and things that occur. So as well as average monthly revenue. And if you have unstable cash flow, bank statement concerns, like average monthly daily bank balance and average daily sales, is continuously low. And when it's too low compared to your deposits and revenue, it doesn't justify you giving you more. And more goes out than what you keep in, your credit and more, like that's the case. So average daily bank balances that are too low, for example, I might say this is based on your file. If it's not based on your file, and I might get more specific. Just an example, you only have $1,000 on average, but you do 50,000 a month. That's a big reason why you get more on the lower end amount. Also, you only get 10 to 15% of your, and there's more to it than just these two things. Also, you only get 10 to 15% of your 10 to 15% of your annual gross sales, and sometimes up to 20%, but more in the 10 to 15% range a lot of the times. But this is more micro funding, so we're looking at it on a month-to-month scale. Just because you do 800,000, and you're saying, "Oh, well, no, you said 10 to 15." No, your month-to-month revenue too is what we need to look at, and that's the numbers we're ideally basing this off of. Now, sometimes yes, they do align the two, but we got to look at those month-to-month bank statements. So payment history earns you more, better payment history, of course. Add-on funds are available, receive funds time and time again. You get early payoff discounts and a personalized account manager to help you every step of the way. You get myself included on top of that. You can turn to me, ask me any questions you have. I usually know them. And if there's anything that changes in the market, I'll go to my lender and my network. But I don't often have to do that because as well as I meet with them, I speak with them, and then there's other things. And a lot of the times I don't have to. I'm just checking in to see, hey, did any of this change? I just want to make sure your notes or your guidelines are the same as what I have now, in case anything did happen. Oh, well, there's something new that was added. Okay, cool. And this is done. So I'm doing a lot of work on my back end, guys. A lot of work. I'm here for already an hour's plus worth, where I could have been looking at other bank statements already and having to move that along the process with my team and so forth. But here, if you do not get all the funding you want in one shot, don't worry. What I tell business owners is to take what they can get, and then in about 45 to 65 days or so, get more. Or when it's completely paid or 50% of the balance, get more. Normally, like I said earlier, 30 to 45 days, you guys are looking for another position. Wait after 30 to 45 days. I would wait maybe a month in, but usually 30 to 45 days, within 30, 45 days, it's hard to get approved for another offer. Now, there's those circumstances where we can get it done earlier, but it just doesn't normally happen a lot of times. So you paid off at least 50% of it. We can then look at refinancing and getting you approved for more funds. And then the second time around, we can even approve you for better terms, rates, and give you a higher amount. For those of you who are looking for consolidation, I'll get into that in a second. This might be a good solution for consolidating because other ones don't work, but I know it's medium to higher rates. It just depends on how you use the funds effectively. How much are you consolidating? You're not consolidating that much. You have extra funds to use. How are you going to use those extra funds? So this is what a lot of business owners do, myself included. Been there, done that. We can also try to add a line of credit on top to get you access to more funding, or vice versa if approved. This way you can withdraw and use the funds as you choose. This option is later below, but keep reading this one, and it may be harder to get an LLC, and you might know that already because of what I said earlier. Sorry, I was trying to find the word. Long video, introverted person. That's what happens. It's usually $500,000 and above in annual revenue, with much more like industry. There's also credit. There's also assets backed or asset-based, collateral-backed based lending later below, where you can try and get more, and if you can get approved for it. When I ask most business owners if they really need everything at once, most of the time their answer is no. I can work this out with you, and you can be open with me and say, hey, this is going to be the way I use my funds. And I can even devise a plan for you and say, I can work with you on that and say, hey, let's devise a better plan. How about we use boom, 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 if you needed guidance on that. So unless it's a project or projects where you're required to have it all at once, like I said earlier, right away, then it's a different story, and we can look later below at collateral-based, credit-based options, etc. What you don't want to do is stack advances, loans, which means getting one after another and then surfing for another offer approval to add on top and try to take both. That will get you disapproved for a majority of times. There are shady lenders who are willing to accept that, some circumstances where it's okay, but no, it's really not okay. And so do not stack. Don't say, hey, I got an approval from this one. I'm going to accept their offer, but I want to see what this one gives me first. I'm going to add the two together. You don't want to do that. Besides, you don't want to be getting multiple approvals from different organizations. You're applying to 10 different lenders and bombarded. That's not what you want to do. You want to have more of an in-house setup when it makes sense to. There's a direct lender. I might say, hey, this company makes sense based on your file, but they're not going to approve you for that, even with the personal business relationship I have on that aspect. So it's better to do it here with all of my team included, where we can leverage that even more effectively, myself and everybody. And then boom, it might not even be that lender anymore. It's going to be this one. Boom, this one's better to work with. And I do this stuff every single day with people. And at the same time, it's like people just want to, no, take the time. Again, you get 4 to 24 months to pay back the advance, which can give you more than enough time. And if you need more than 2 years, I'll show you later below, but you will not qualify. I might tell you might not qualify, or I'll tell you you'll qualify for them at this time, unless you put up collateral, which may still not be enough. Not talking homes here in this specific revenue-based service, not taking homes here unless you do a HELOC or similar, home equity line of credit, home equity loan, etc., or credit-based. Some personal term loan, or we do ERS funds or something similar that we can collateralize real estate property. Term loan, line of credit service with the co-signer, someone who can help apply with their credit. So if you wanted to, and you don't have the right credit profile, you can use somebody's individual credit. They're willing to apply by themselves, or there's a co-signer part, but usually it's an individual who's applying with their own credit that says, hey, I'm willing to take on the debt to help this person that I trust in to be able to do this with their business and pay it back, etc. Or you even own contracting agreement on the side on top of them paying it back, or you guys maybe split it and you go, hey, I really needed 100,000. I can only qualify for 50,000. Do you think maybe you can help with this, friend or family or whoever it is? And they're willing to. They're like, yeah, we'll raise funds for this, at least 100,000 in total. Boom, bada bing. There you go. You move on to the next thing. And that's another pro tip. But you don't want to maybe over leverage yourself too much. Just be careful about what you're doing. Or raising your own credit to a 680. Sometimes 670 is what we'll ask for on all three consumer credit bureaus. Other times it's 680 when it's credit-based. FICO experience, sometimes it's 700. 700 is really what we want, and we can look at it for one credit bureau. Others would say, hey, we want 670 on all three to look at personal funding or fast-track funding, and it's maybe just high balances that we need to clear, and it takes a payday loan or something similar, or we just can leave it as is if everything else looks clean enough. And no collateral, as well as some collateral solutions are involved. If you would like to, you don't need to. Equipment financing, you have what you need. Equipment financing specifically, leasing, etc. Or you go through the SBA 7A, there's a 504 option, or a loan program, and you have 2 years of recent profitability. If you don't have 2 years, we can look at cash flow requirements, and it's based on that stronger cash flow. We do an EBITDA. We do net operating income when we look at those lines, depending on the taxes, etc. There are multiple things that I can do numbers on all this in my team too. So, and then how to see how much free cash flow you really do have, and freeing up your cash flow for the next 2 to 3 plus years and down the road. And need at least 660, 675. There's times where it's like less than 660, 650. But for a majority of these, depending on the amount you're asking for, 675, 680 is the standard you see, plus FICO, or 700 plus. And because of your industry, it may make it harder as well to get because of revenue and more, but just in cash flows, etc. But just keep in mind before I break down some numbers below that with longer terms, with like 1 to 2 or 2 plus years, you can get a higher total cost of financing over the course of your loan, paying unwanted, unnecessary interest, as well as the amount you may get approved for, and it can take longer to get. So here's an example where I run through it, not based on yours. When you submit things, you'll see it. But so your payback amount, it's between 1.19 to 1.55 year advance. So meaning if you get 15,000, let's say, approved for, to start, to come back and get more after paying 50% of the balance, then we can even, or 45 days in, add on funds. If we could add some funds, maybe a couple thousand or so if necessary, we could. Even get to double the amount next time around, dropping your rates, increasing your terms. That's how you do this. Then your payback is between with this. So we're taking a multiplier of that 15K by the lowest minimum of 1.19 and the maximum of 1.55. You also do see like 1.69 in some cases because of lower revenue and underlying circumstances, things we have to look at in the business. But then your payback is between 17,850 to 23,250. Now, can you pay back 17,000 on 15,000 or more or less 18,000? Can you pay back that? And now what are my terms? I'm going to get into that in a second. But at the highest, can you pay back 23,250? Well, oh, that's so much to pay back. I don't think you guys are crazy to have me pay. No, we're not crazy. You just have a misunderstanding of how this works and how you're going to use your funds. You're not the right client to use this funding. Does that make sense? You may not be, but somebody else is who goes, I'm going to use this money correctly. Yeah, I'm going to use it in the first month where it's not going to be effective, but in the second or third month, I'll be increasing my revenue. I'm going to be using these for these projects. I'm going to stay stable. Well, I really needed the money. I wasn't going to grow it and expand it, but I really needed it temporarily. Let me start off with less. If I can get approved for less, drops my repayments. I'll get into that in a second. Sometimes a bit higher too if a high risk. Use this money to grow and increase your revenue, and your benefit exceeds your repayment. Given the funding details you submitted to me, you have what we call C to D paper. So depending on our underwriting, and this is the best underwriting there is too, just so you guys know, which gets you terms between 4 to 6 to 4 months. You're not even A to B paper. You're lower tier. You can go lower too. And rates between 1.31 and 1.55. Your credit, if we're talking bad credit, could be good credit, but you don't have the revenue, you don't have the time in business. There's some underlying issues. To get 7 to 11 months, you need 25,000 in monthly revenue for a majority of this. To get 12 to 24 months in terms, you need to be doing 50,000 plus per month in revenue. And on your lowest month with 1 year plus time in business and 675 plus FICO. To get rates between 1.19 to 1.30, you need a 700 plus credit score with 50,000 plus in revenue and 2+ years time in business. So there's some of the underwriting, but it also varies because of industry, because of market. But this is the majority and the standard of what you're going to see no matter what. And things change, and we look at things and we look at other positions and we go, hey, well, you're not going to get more of a term if this is the case with this and that. And boom, 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 your revenue dips, boom, 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 boom. That even adds more of a risk, higher rates, lower terms sometimes. So these are the issues. And so you'll know the exact terms and all you're getting. We've been able to review your application and documents. So I can't say exactly what you'll get right now, but it's a soft one. I can give you guys a pre-underwritten file depending on what you have. And this is why it's so important to know this. But it's a soft pull for the majority. When there's a hard pull, there's been cases, but it's normally a soft pull. Credit may be the issue, below 650, below 675. In some cases, they have to do hard pull, but not without your consent. They usually ask for it. They have to look at something deeper, but it's not usually going to be a hard pull. It's usually a soft pull for the majority of it. To submit your application, so it won't affect your credit score. Plus, you have to start somewhere and move up so we can increase the terms, decrease the rates, and get you more funding. And remember, with me, you're working with the best lender and lenders and network in this space by far. If your benefit exceeds your repayment, then it makes sense in many cases. But for example, not set in stone, let's say you get 15,000 to start with at a total payback of 1.35. Your industry, credit, revenue, and DTI, et cetera, can be a factor. Somewhat DTI, but not always. Negative trade lines, other things. History can be an issue. With 6 months, 120 payments or so, then your payments will look something like this. Daily, $169. Weekly, and it's not going to be daily for you because with that low revenue, it's normally daily. Can you afford? Well, we will never give you something that you can't afford. Now, it's your decision to make based on your own understanding of your business. Now, if I were to walk into your business, and really understand it, the financial side of the equation, everything else too, could I then make the decision? Yes, of course I can. Weekly, $845 per week. Bi-weekly, $1,690. Monthly, $3,380. So we're not going to give you a huge lump sum of $3,380 to pay at the end of a month, one-time payment. That does not make sense. It causes defaults. People end up in collections, complaining, well, I couldn't make the payments. I'm facing financial hardships. And well, this is why we gave you the daily, weekly, micro managing payments. And well, that's still not, well, whose fault is it? Well, it was an issue with COVID, or okay, if those are issues that were external, that were out of your control, we get it. We can try to work and try to lower the amount that you have to repay us back, but it's hard to do that, lowering those repayments, unless it really makes sense. Overall total cost of financing on this $3,380 with some additions, so it's not concrete. But 6 months, let's say if you were only given 6 months because of your revenue bracket, your time in business, your credit, et cetera, you're going to be paying back more or less on that $3,380. If you paid it over the full 6 months, you're paying back about $20,280 more or less. Now, if you decide to pay it back in 4 months, of course, that number is going to shift. You're going to bring it down. 3 months, pay it off early. You're not going to be paying more. Save more. Early payment discounts. Yeah, that amount, you crazy. Well, I'm not crazy. You can say that. I don't get upset. I don't get discouraged. I have compassion for you. That's all I have is compassion. For those of you who get upset, who cry, oh, you, screw you. I don't normally get that, by the way. And it's absurd when people do say something like that because I didn't deserve it. And if they don't like it, it's not my fault. It's a problem that they have with themselves. It's a problem that they have with their business combination. And I'm not saying, again, that to be mean or to offend anybody or to be negative. It's the truth, guys. Pay it off earlier if you can. No prepayment penalties. Oops. And we usually have the best early payment discounts. Make sure your benefit using these funds exceeds your repayment. Otherwise, you will never justify doing it. If you're doubling, tripling, quadrupling your revenue and exceeding the repayment, then it makes sense to do so. And even if you're not, but you need to fix things and get back to on track, it probably drips your cash flow a little bit, or you're using it for growth and expansion, but your cash flow, it's still not growing enough. Well, that's a decision that you have to make and say, well, I do still need this money to use, although it won't have the best effect on my cash flow. I do really need it. And it's going to use, and it's going to be a better benefit to grow your revenue. So then for later on, then we can free up that cash flow if that's the case. If let's say we were to drop the amount, let me give you a good bird's eye view here. Look, 15,000 here, but 12,000 to begin with. We didn't change the terms. We didn't change the rates. 6 months, 1.35 rates, and that's pretty rather like low if you have strong credit. Like 1.35 is not the average. You gotta be having like really excellent credit at that revenue. This is normally like around 1.45, 1.5, 1.41. If you have strong credit, 700, 725 and above, a lot of times we can see 1.38. Even underneath the 700, more or less, sometimes a 1.38, 1.37 on average is what you see. But there's a reason why you're getting what you're getting. And then daily, look, it drops your payment by $30 more or less. Not exactly $30, but you can see that there. The weekly, now from $845, we went down to $675. From $1,690 bi-weekly, we went down to $1,350. So now it significantly drops it by $300 or so, $200 or so. So you're seeing a recurring increasing drop in pattern. Monthly, $2,700, $1,000 plus difference. So if that to you makes more sense and you go, hey, I want to start off with a little bit, then I can. Now, if you can't, that's another thing. So you won't always have that privilege or that given. I don't want to use other words, but you won't always have that given. This is just an example. It's not set in stone. I could have said other example. Excuse me. I could have put other examples like 200,000 you were getting, and you get an approval up to 200,000 you can choose from. You take 25,000 because it's a lower repayment. You pull more as you go. Come back. I can get you more from the same lender, if not a second position, if you needed it right away. But you don't just start go, oh, well, I got funding from him, and I'm gonna go. Be loyal, be respectful, be accountable. And you may not know that when you're applying to other places, but I'll address that with you as I am doing now. And I'll usually get you the best. I'm very transparent. And don't you want to work with somebody that's like that? I won't bombard you. I won't pressure you. I'm going to be calling you every second. And I'll even tell people sometimes, well, I'm an introverted person too. So that's sometimes not something that I want to get. I know how to do calls very well. I just don't want to. And you just don't want to be in that position either, I bet, because you're busy. And if I can send you a quick text message, would you prefer that? Yeah, actually send me a quick text, email. Cool. I'll be on the lookout for it. Now, it depends on what we're doing, though. It's just a softball, so it doesn't affect your credit. It's not about the rates. It's about the total payback. And if you can get a longer term to begin with, better. Longer term, lower repayment, great. But if you can't, you got to start somewhere. Plus, you have to start somewhere, build a relationship, and you can get access to better terms if you don't start with a higher amount of time. And it's not, and it shouldn't be just based on rates. There's more to this, like your benefit of taking the funds shouldn't be exceeding your repayment, excuse me, doubling, tripling, quadrupling your ROI monthly. So it helps. Payoff discounts explained, and I forgot. Our lenders will never charge a prepayment penalty for paying off early. However, prepayment penalties are very different from early payment discounts. So now that you understand that, here are the payoff discounts you can get starting with most of the B and C paper lending clients. I'm not going to go through all this. You can see it at a bird's eye view, but it is there. Paid off in the first month, your discount of 12% of unpaid balance. It includes principal and the cost of the funds. Other times they apply it to just the cost of funds, the interest remaining. So it just depends on the situation. Paid off month 2, discount of 10% on the unpaid balance, includes the principal and cost of funds. And there's 8% there. On A paper, 20 to 25%. I've even seen it higher than that. And we can work things through and negotiate. And if it's not a good negotiation power thing, it's okay. Unlike for B and C paper, and go into that 100K prepayment example. Let's say you're getting 100,000 in business funding and you're giving a factor rate of 1.38. That's 138,000 you're paying back plus an additional because there's closing broker fee stuff, but that's how it pans out. And a lot of the times, being able to afford more than 16 to 18% of your monthly, if you exceed that type of a repayment, we can do a calculation on this. Like, this is why lenders don't give you more than what you can afford. And I don't want to get too deep into that subject right now, but those are things that I do on my back end. And so the industry standard in half these numbers, however, most lender partners provide the rates, and I'll show you below using the 8 to 12% discount scenario, B and C paper lenders. Your prepayment discount would end up being $11,040 to $16,560 minus your amount already paid in. Using the 20% to 25% discount scenario, and it can bump up more or less, your prepayment discount would either be 20% or 25% of the 38K cost of funds, or $7,600 to $9,500. That's a huge difference. Does that make sense? It's a very unique way to get accommodated for paying your advance back sooner rather than later. We even have lenders who can do other options for revenue levels based below 50,000. I might tell you to skip this. I might tell you to continue through this, but this is another thing that we may not go through with this lender, but it may be in your best to go through. And I'll give you guys breakdowns of an example here of what to do and how it looks like if you paid it off in the full 30 days. you get a 1.19 to 1.29, 1.29 to 1.39 paid back in 60 days. So 1.49, 1.69 in 6 month, 4 to 6 month durations. And the more you wait, the more you're going to be paying towards interest, and it's going to be costlier. So I give you guys examples based on certain numbers there, depending on your file. Again, it's just based in, it's not set in stone. It's just a soft pull, etc. If you feel what the total payback will be high, I tell business owners to scale back, start off with less if they can, and we can drop the monthly, daily, and weekly, bi-weekly repayment, and then take it from there. Then you can come back and add more funds right away with add-on funds and renewing. Again, a lot of people will do this. It's about building the relationship with myself, the lender, underwriters, and myself, as I said there, and providing you, proving you can make the payment so you can then get more funds later, drop the rates, increase the terms, and so forth. Right now, it's a time to build a relationship with the lender because of the market. Note, here's some, oops, I almost exited out of this. I was trying to flip through a tab of mine and I almost clicked out of this tab, my StreamYard tab. Good thing it asked me if I really wanted to exit. So note, I had a lady recently and I had another one too, and multiple people, they're saying they're getting around 600,000, doing 300,000 in monthly revenue. There's others for 100,000, there's 50,000, 25,000, even up above the $100,000 to $300,000 range and more. It just depends on the certain client. But they started with the 150,000 instead of taking the 600,000. Why? Because they didn't have to provide extra documentation, such as a recent tax return and year-to-date financials. So you can do the same if you don't want to take extra time to receive your total funds. It can take a couple more days to do another week or so to get you anything over 150,000. Sometimes at 100,000, we'll ask for the returns and the year-to-date financials if you have other positions and we're seeing something that doesn't look right. We want to make sure we can verify things. And so other lenders, where if you are not in that position, they will say, hey, we'll waive off the return, the year-to-date financials. You don't have to supply that, or something small or none of it. You go, we can trust them. We've seen this, boom, boom, boom. Let's move this along faster. But just expect that here to happen in cases. But if you don't need them all at once, you can start off with less and come back and get more. That's what I recommend. It can even look better when you're dropping your repayments and so forth. Here's an example of 150,000 at 18 months with a 1.23 rate. $513 per day they're paying, $2,565 per week, and monthly $10,260. So yeah, for you, it's not doable if you're not in that position. Even if you have stronger revenue like they do, you might not justify taking it, or you can't qualify for something else. Or you can add the line of credit option I'll share with you below and combine the two if possible. On top of that, we can combine you for multiple offers and get you offered at a lower amount, and we can keep the rate and terms the same. This way you have lower repayment on daily, weekly, and monthly basis, bi-weekly. Plus, if it's just one offer you receive, we can readjust if needed. Here's some of the underwriting that I go into, who are more on the underwriting process. The rates vary depending on FICO, time in business, other credit issues such as past bankruptcies, if any, or number of current delinquencies. Lender partners take into consideration time in business and monthly revenue dips when considering, or when determining your rate, I should say too. Other issues that may impact the rates you get are a number of current funding positions, the number of NSFs, number of negative bank days, number of inquiries on credit from other lenders, daily balances, along with a few other factors. We went into trade lines in the beginning of this and a few other things. Also, most recently, the state of our economy and the market. Like, you may get less funding with lesser terms, and that's what we're seeing across a lot of industries. You're not getting approved for those 200,000 like you thought you would first. Maybe you get 100,000, 75 to 100,000, and it once was 18 months, but now it's 12 to 15 months. So these things happen, and I'll communicate them. Terms, they're dependent on business type, revenue, and credit. Okay, I'll show you right there. Speed through it. So you see what you'd be getting, what you're getting, right? Again, these numbers for an example. Boom, 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 ballpark. Balances of okay, no prepayment penalties. Sometimes daily, sometimes weekly, automatic payments. And you guys saw there what would approve you for weekly. And it can be adjusted per case base, but usually that's what it is. That's the standard and what you're going to see. And it's the best that you're going to see. It's very lenient. Monthly causes too many defaults in this industry. In good standing with your payments and time and so forth, you may be able to go weekly, and I'll address that to you if you can or not. We also have bi-weekly, a monthly product. Like I said earlier, somewhat monthly, but it's harder when they go up to 36 months, and I'll show you another one, but these normally don't work. It has to be the right business. But if you don't show the lender, you can repay the advance, the loan, even better. If you do it earlier, you may get to go to that option weekly, from daily to weekly perhaps. Everyone goes through this, and if we can get you a weekly payment from the beginning, we'll try, but it's usually daily. And with your strong revenue, we can try to get you a weekly payment or a daily. It depends on who I'm speaking to. These are best so you don't go into default. There's a little bit more. Boom, boom, there. I just don't want you to pay more at an added interest. There's more information that are going to clear your objections there. You guys need to really see that to understand that, hey, this is really how it works. Documents, 3 months of bank statements for months in California. And if there's another state, I'll address that. Voided check, copy of your driver's license. And I'll say, hey, you'll be able to safely upload them through our app process, and we'll get them in our backend and we'll review there. Or I'll tell you, hey, just submit it to me this way and I'll send it over to my lender or my team this way. We can then review it that way. There's multiple ways to do this, but I'll let you know what's the best option, especially with new disclosure laws and how it's best to ask for that document or those documents. Second option, I may have something there. And what you saw earlier to the application, I might have extra review content that you can check out underneath that application in case you had any doubts on the terms and rates application process, the pre-approval process perhaps, or this and that. I may have that, may not have that. So debt restructuring, if you are in a situation where you have too many advances and you can't refinance, you guys can't consolidate underneath an SBA or another format, there's debt reconstructing. So I have a debt restructuring, excuse me, too much time on this. We're already 139 in. And settlement team that works with merchant cash advances or cash advances, anything similar to that. All situations are unique, but you may be able to get a customizable plan. We're reasonably expected to see payments drop by an average of 40 to 75%. That's huge. To give you an idea of what can be done, if anything, I will need you to fill out a debt restructuring application and business debt schedule, which I've attached to this email, or I'll tell you I have not attached it to this email yet. To be sure, in almost all instances, we can reduce short-term repayments and get the face value of the MCA debt reduced by more than 25% on average, as we saw there. Net of all fees included in that. We have over 90% of an approval rate. We also need your contracts you sign, usually via DocuSign. They have legalese in terms that our legal team will use to reverse engineer, an escape hatch for you potentially. So that's a good thing. Every time is what we see. They all work 100% are successful if you do what you're supposed to do. If you don't, then it won't work. If you ever need this service, please reply back to this email, document, etc., and I'll send that form over and that document on what is needed and asked for. So I already went to how it works. We're already closing up here. I think we're done with this option. I'm just going to quickly skim through some of the other options just so you see that they're there and that are available. You have no question about this. If there is anything, you can reach out to me. Self-employed option, if you have, like I said, personal account, or you have lower revenue, this is going to work. And I'll tell you whether it works or not. I may have this part here, or I may not have this work. This part here, I may have this just like this, depending on your file. And I might put some extra stuff here if need be. Certain states and places that can't work for, and that probably gets updated over time. How it works, where you want to submit it. Online bank term loans up to $350,000 without collateral and monthly repayments with your choice of 2, 3, or 5 years, sometimes 7 years. Online bank term loan options, and I go through all that, requires minimum of 2 years. FICO SBSS scores, business liquid credit score. So if you don't have business liquid credit, and this is stuff you guys don't have built, credit profile, personal and business, it'll be hard to get approved for. Have no outstanding tax liens, your minimal annual revenue requirement of $250,000. Your business must not have any bankruptcies or foreclosures in the last 3 years. No recent charge-off or settlements. Your business must have appropriate cash flow to support loan payments. So we'll look at that. That's more important. And then we're not just basing it on month-to-month bank statements or revenue. We're basing it off over global debt service coverage ratio, debt personal business, debt service coverage ratio, etc. Here's what it can be used for. But just a few more things. I'm not going to go through all of it, but you guys can see that on screen. And I'll try to leave this document down below with some readjustments. SBA 7A option. I might leave different preferred SBA 7A loan lenders, but that's there. I'm not going to go through all this, but for startups and non-startups, doing a lot of this stuff right now. Equitable collateral, certain questions that you have to answer for me and or yourself at least first. And then the minimal requirements where you can get up to 10 years amortized, prime rates plus 2.75, plus 3.75, 1 to 2.75, 1.17 to 1.75 to 2.75. There's a lot of little things that I'm not going to cover too much right now until we see things. So no minimum time in business, startups without strong collateral experience and personal sponsorship, etc. There's a little bit more there to detail. Make sure that's required. If you're a startup, non-startup, acquisition, Steps, pre-qualification. Step 2, financial section. If you need a business plan or stuff, I'll address. Step 3, credit approval. Step 4, closing. All could take 1 to 3 months. I'm not going to go too much into that. We've gone way over time. Prime rates, what you're seeing right now, 10.75. Perhaps you'll start off with 10.75 to 12%, more or less. A lot of these cases, and then some few scenarios. Not set in stone. You can get started there. What documentation I would require, when I would require it. etc. Business line of credit, you may or may not qualify. I might leave multiple options there as you see. But that's why you fill out the questionnaire, as I'll show you more. I'll tell you, hey, this one's best. I'll show you 3 credit options on business lines of credit, but the first one's best. Equipment financing, leasing to own, option 1, 2, 3, 4, however many, and I'll tell you which one's the best one for you. Cash out refinance, personal/business startup loan option for credit-based funding. This is what it is. On credit-based, we're going to close up here in about 5 minutes or so. Best option for personal/startup business funding. Please start here if need be. Get a cosigner, someone who is willing to apply with their credit to take on the debt underneath their account if they're willing to do it. Best option for stretching out your terms and lowering your rates. Does require stronger credit though. Good credit. See some of that option there. 1 to 5 year terms, 6 to 30% interest, 6 to 25%, or sometimes 6 to 18% is what you see in most cases. 7 to 15% is what I see a lot of the times being approved for. Here we go. But again, it's based on the file. Important details on credit based on debt to income and what we would ask for. It's all in there. And maybe I have another option and I go, hey, this is the second best option, but I recommend starting with the first one. Or hey, I might position this one up above the first one. Or I may move things around and say, hey, based on this, or I'll move things around. 670 credit. This takes a little bit more to get approved for. But it's all in there. Stuff that you guys cannot just find online and somebody else making a review video for. And I have this stuff too because I interact, I communicate with my lenders and what they want. Option 1, continued. I might say that here. Or here's the option 3 for personal/business startup funding, but I say skip it, not best, or you don't qualify. Go to the first one. Boom, boom, boom. Here, credit line hybrid, similar to the second option we just saw moments ago, but it's here. I'm going to give you it and I'm going to put it in the section for you. Add multiple business credit cards at 0% interest. Down here, SBA microloans, grant opportunities. There's a doc there for you. See the microloans, SBA Community Advantage, angel investing, equity crowdfunding options, other crowdfunding, venture capitalists, perhaps, VC and angel investors, margin accounts, financial guarantee bonds, FICO credit score improvements. There's 401k IRA financing, by the way. That's another one we can look at. I think I have it lowered. Yeah, it's lowered. And so there's credit-based financing. You see the credit repair. There's tips here. It doesn't have to be immediate credit repair if you know how to do it yourself. If you want it for convenience and you don't want to continue making mistakes on this or make mistakes, I recommend going with this, what I recommend. Credit repair, and all the information is in there, the description, the benefits, the amount it would cost. Really not a lot to spend on. It's $150 per month compared to everything else out there where you're spending like even thousands upon thousands. You're hiring like lawyers and doing all this stuff that it probably wasn't even needed. And it didn't even get reported accurately. And you don't want to deal with all that. This is very effective with the disputing process. And I give you guys a place to go fill out that questionnaire for that. Bonus, building business credits. My free business credit building video series is right there. You can pick up if you haven't already. Learn more about business credit cards, good to excellent. Credit cards, good to great. There, fair credit, cards, and more. Home equity line of credit, home equity loan, 401k, there it is. IRA financing, stocks. Great place to start as well. Not enough people know about it or utilize it enough. Alternatives to it. SBA EIDL Loan, latest updates, employee retention credit program, real estate submission form. In conclusion, like I said, there's many more too, like the SBA 7A CRE loan I might show you specifically, or other SBA loan options, but I'll tell you those aren't best. Other unsecured financing options. But what you're seeing here is really like the best of the best. And if there's things that are added, it will be in the questionnaire. And here you see the specific real estate financing form. Okay, so we're done here. Let me go ahead and switch over screens. This is what I kind of wanted to show you in the beginning, but I didn't. And you have seen this. But see, when you fill out the questionnaire on my site, I'll get details like this: the name, the email, phone number, funding amount, time in business, credit. And I'm not a creditor, by the way, so you don't have to worry about that. Safe and confidential with me. Business credit, ownership percentage, lowest monthly revenue, and I evaluate and I analyze this, and it speeds up and it helps us out a lot. And I gave you a lot of examples. I made other video on this content. This may not be down below, but I broke this down in another video. I use this as an example. And the questionnaire that I'm alluding to is this one right here. So this is what it'll look like, more or less. And if it's changed over time, you'll see that. There's some few results. There's many more that I've done. I just wanted to fit the screen here and just show you just some of them. It's your money. Go ahead and claim it before it's too late. About myself, you can learn a little bit more there. And this is what it'll look like. plus a free 6-step proof of lending checklist. It might look different over time, by the way. So if I'm a non-startup, I'm going to select there with my respective information that applies to me. Get the funding your business needs fast. Complete the questionnaire form below to get a personalized and customized, I should say highly personalized and customized email response for your best funding option and options from a real business loan broker expert, unless you don't care about that and you don't want the best is one thing. Please be serious and responsive. Please do not be that person wasting my energy and time, being hard to get a response / feedback from. I spent a good amount of my time and energy on this, so please respect that. Be responsive. Plus, get a free 6-step proof of lending checklist to get you approved for funding much faster without making mistakes. So I've added a few things recently, but your name all the way down here to please describe your financial needs. Be thorough. You can give me some rough estimates on the number parts. If you don't have it all in hand, you don't have to, but you should know more or less what to put there. And so there it is. These answers, they do make a big difference. Like when you answer these, they're night and day. So here it could look like that, more or less. Might be a video. And there could be a thank you page video you guys go to on the next side. So here, let me go ahead and type this in here. On my side here with viral funding solutions. It may look different over time, but there it is.
I didn't get that. Could you try again?
That's my Apple Watch. And here you can say get started and it'll take you to the questionnaire. I may have that different over here. Might change some navigation tabs. And there's a little bit more. Why work with viral? Let's open that up and we're going to close up here.
I'm not sure I understand.
4 reasons why business owners choose to work with myself and Viral Funding Solutions. And a lot of this is me doing it. That's why I usually put the person first before me. But this is normally a lot of the times me doing it at the moment. And I take good care of each and every one of you. So when it comes to this point, you have experience. With the many years of experience in the business finance space and running multiple businesses myself, I can greatly understand the importance of becoming and staying well capitalized, even when the banks say no, or it's hard to get as much as you want, or it's not working for you. And even through your hardest of times, we have vetted the best lenders and underwriters and sphere of influence, so you only get the best. Versatility. You get the versatility and flexibility to use a number of different services, even combined, to get you maximum funding at the terms and rates and more you do deserve with a plan and customized solutions. And let me move this over because my HP is lagging. We take out the box thinking. We take out of the box thinking to another level. Oops, I know it gets dark because of this HP lighting, though it gets in my way. Integrity. We believe that your priorities and your needs are met above ours, and we strive every day to maximize your results at the most efficient, energy, and time-saving ways. Your personal and business relationship matters greatly. You're not a number to me / us at all. If you've been following me for some time, you know that. I'm not just saying here, click the link down below, just show me the application. There's a reason why you guys don't get shown just the application in the majority of times. Loyalty. You are at the front and center of what we do. And you're getting somebody who will stand by your side even through your toughest of times and help you achieve your long-term outcome without question and without feeling pressured or worried somebody is going to sell you hard. Yuck. You guys don't want that. Do you really want somebody who's going to be there yapping in your ears? I don't even know how I've made it an hour 52 minutes, to be honest with you guys. This is probably going to be the most talking. I'm probably taking a break tomorrow. But as long as you guys have this, you guys can go back to bad credit or not, bad credit, good credit. There are many solutions that are available. There are asset-backed, collateral-backed, line of credit. Well, I should say collateral-backed credit. There it is. Credit, collateral, cash flow, or revenue-based financing. You either have one of these 3, 2 of them, or none of them. And a lot of the times I can just see the surface level and I understand, and I can connect you. Once you start seeing more of those credits, cash flow, collateral requirements, then you go, that's the one. And there are times to be made where I will ask for your credit reports sent to me directly. But a lot of this, I don't have to. We could just look at it internally too when you go through the application, and we can get it on our back end that way. We can work on it that way. It's just a case to be made for each and every one of these. And just rest assured that I take great pride in my skill sets and my amount of cerebral work, because you guys don't see what I'm doing. Like, I put my head down and I work, I can put myself in a room for hours and I have so many ideas and I go, well, that's how I'm going to iterate that. I got to iterate that A/B split test. Got to put this word here, this landing page there, boom, boom. And I'm always iterating things. So kind of tired now, guys. Appreciate you guys. I like that word. Thought love, like tough love, but thought love. You got to put the thought and the toughness together in one and know that it all is coming from a place of my heart and from a lot of love. But a lot of you, some of you, I question like where you're coming from. And I don't want to be rude because I'm not like that. I was never one to point fingers. I was never one to bash anybody. I've never been that way. But a lot of you, I question and it's a head turner. And I go, And I won't normally say it out loud, but I'm thinking it to myself. Appreciate you. Thank you, Gerardo, for taking the time to say and acknowledge that. I really do. Expertise, versatility, integrity, loyalty, and there's more to this. But whether it's my business, it's myself, yourself, your business, or businesses, anybody else's, the one thing that stands out above all of those four, and there's more of them that I could have put there. If any of you know the answer to it, just keep it in here. But it is loyalty. A lot of you guys lack that. I know who those of you are. And okay, it's something you have to work on or you don't really care about it. Okay, each to their own. But loyalty makes a huge difference because I'm going to help you grow from one aspect. I was going to say grow from one level, pretty much the same. From one level, one aspect to another. And you're not going to have to think about it twice. I've had people, not sure why my nose is itchy. I've had people today on multiple accounts send me text messages and go, Michael, that's the option I want to do. And I sent them to them in an email. Boom, very well. And people can't do what I do. Not a lot of people can sit on the computer and put these crafted out, thought out emails the way that I do it. And they'd rather be on phone calls all day. And I'm like, okay, if that's you, that's your extroverted personality to be on calls. And even if it isn't, why would I want to be doing that every single day? The point of this is to free up your energy and time. And so if you had somebody else to do it too, you could get somebody else to take care of that. And I could too. But that's not the point. That's not the driving point right now. And you want to have this in my hands, a lot of it. So I was working on Saturday and I was getting things done. So I'll leave this open if anybody has any questions, comments, or concerns. I know a lot of you are busy. It's a Monday, And even those of you who do watch this later on will probably go watch another video and go, well, I want to see what they can give me. And you're going to see that they're not going to give you much. And they try to help you on the back end and you're going to say, well, I wanted to know more about this, but they didn't even cover that. And hey, each to their own. I'm not trying to bash anybody, but just be very careful about who you get your information from. Okay, everybody, I think that's what I want to do. I'm going to cut it up here short. I appreciate each and every one of you. Thank you, Gerardo. Thank you, everybody, for tuning in. I know it's spontaneous. I didn't broadcast this out to everybody. Not sure. I get that way too because long video, I'm getting tired. I think that's where it comes from and a few other things. But I just want to make sure you guys have all the information on hand. All information, I'll leave it for you down below in the description. Please refer to that to reach out. Questionnaire, the business credit building, personal credit, my email address, but the questionnaire is first and foremost. And then we will take you to another level. Okay. Please give it a thumbs up. If you did get value from this, share it with others who you feel will find value from it. It can be a complete stranger, a friend, or a family member. And if you haven't subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future content I will be coming out with. That's it for now. Take care and have a great rest of your week. And if I'm going to speak to you here soon, email or in other ways, I'll get back to you guys and let's get it going. Let's get rocking and rolling. Take care.